Good evening, all. Shall we start? Welcome to today's session. First of all, I welcome CA Tony Varghese, Chairman of Ernakulam branch of CASA of ICI for the welcome address.
Am I audible?
Yes, sir.
Good evening, everyone. Respected faculty for today, CA Anushree, Agrawal, our committee members, Vice Chairman Sriraj, Secretary Sai Kripa, Academic Affairs Coordinator Hanan, and all our core committee members of CASA, and my dearest students. So CASA is once again back with another episode of our revision series. And today it is total income computation. And I have to say that this is one of the core areas for the income tax in the intermediate examination, because the amount of marks it carries. So it is really important for you to understand comprehensively all the provisions and then apply it with your mind in your examination. So it's a very important area. It's a very it's a good area for you to score your marks, and obviously income tax is a paper in which you can score exemptions also, provided you do the background work. So today I'm really happy to see such large participation. We have almost 150 students here. Really happy with the work that the team CASA is doing. So I wish you all a wonderful day of learning, and let me quickly get on to my duty of welcoming our faculty, CA Anushree Agrawal Madam, to this program. Madam, on behalf of everyone present here, I cordially welcome you to this event.
Thank you so much, sir.
And I take this opportunity to welcome all our CASA committee members who have worked tremendously to make sure that the revision series is in full-fledged. I have to congratulate Hanan for coordinating all this throughout the past 1 month. We've been having so many revision series. So and on behalf of everyone present here, I welcome all our committee members and our entire bunch of students who are attending today. I wish you all a wonderful hour of learning, and over to you, RMC.
Thank you.
Thank you, sir. Anushree Agrawal is both a chartered accountant and also a company secretary. She has been a rank holder with All India Rank 14, All India Rank 5, All India Rank 4 in all 3 levels of the company secretary course. After working for a brief period in PwC's direct tax team, she began teaching law and income tax to CA and CS students. It's been more than 8 years since then, and now she is associated with academies across Tamil Nadu, Kerala, Karnataka, and Andhra Pradesh. She has authorized a book on corporate and other laws, and with several rank holders and exemption scorers, result of her students speak for themselves. With due respect, I welcome CA Anushree Agrawal to take today's session. Over to you, ma'am.
Thank you. Guys, could you please confirm, is the audio video clear? Can we begin? Yes, come on, let's start. So I hope all of you got this sheet of questions. It's also uploaded on my Telegram channel. So in case you haven't, you can download it from there. I'll start off with the first question, but wait, before that, let me just tell you what are the questions that I've picked for you. The first question is from your recent mock test paper, the latest mock test paper, May 2023. After this, we will be doing the November 2022 question paper, total income question. And then after that, we have 2 more questions. All right. So the first 2 are the most important 2 questions for my discussion today. We are going to be covering several adjustments, several interesting adjustments to through these questions. All right. Now, how do you make the most of this session? You can keep solving along with me. Do not just listen to the session. All right. Do not just watch the session. Instead, have your stationery, your calculator, your book with you and solve along with me. All right. So I've not randomly picked, random total income questions. I've carefully chosen those total income questions which cover a lot of adjustments so that maximum possible revision happens. Because come on, I mean, we're 1 month before our examination, and that's exactly what we need, right? In as less time possible, as much of revision as possible, that would be effective. So with that in my mind, I've chosen some questions. So let's begin. We're going to be seeing the very first question. Participate as much as possible in the chat box with your answers. Okay, let's read the question. I'll show you how exactly you can handle a total income question in the fastest manner possible, also the most accurate manner possible. Okay, let's see what it says. Mr. Summer, a resident individual aged 43 years, so I can conclude he is not a senior citizen. He provides professional services in the field of interior decoration. Guys, as soon as you hear interior decoration, does something come to your mind? Something should. As soon as you see interior decoration, does section 44AA special services or specified professional services, doesn't that come to your mind? Under section 44A, there are some specified professional services, guys, and interior decoration is one of them. So which means I can say that Mr. Summer is providing a section 44AA service. That is, I can say that he is rendering a specified professional service. Now, because he is rendering a specified professional service, I will go and see his total gross receipts. I'll see his total gross receipts. How much are they? His total gross receipts are more than 50 lakhs. Therefore, I will not apply section 44 ADA. Are you noticing the way in which the thinking is happening? Yes, he is an interior decorator, I saw, which means he's a specified professional. And if he's a specified professional, I may have presumptive taxation under section 44 ADA. So I will go and quickly look at his revenue, his gross receipts. His gross receipts are 58,80,000, which is more than 50 lakhs. And because it is more than 50 lakhs, section 44 ADA will not apply. Had it been within 15 lakhs, had it been up to 50 lakhs, you would have applied presumptive taxation under 44 ADA. So is my first conclusion clear? Yes, then let's proceed. What else do they say? His income and expenditure account for the year ended 31st March 2023 is as follows. So they've given us information for previous year 22-23. That is, they've given us information for assessment year 23-24. Now they've given us a P&L account, and then they have given us a set of adjustments. What are they finally asking us? Compute total income and tax liability of Mr. Summer for assessment year 23-24, assuming that he has not opted for payment of tax under 115 BAC. Ignore the provisions under section 14A. Okay. So major focus is going to be on total income and tax liability. So let's get to work. If you noticed, I am not even seeing what the adjustments are. I am not seeing all this English that is written over here. I have just seen what exactly are they asking me, and I'm going to start working out. And as I work out, as I read the adjustments, wherever a working note is required, wherever an adjustment is required, I'll keep putting down the adjustment. Okay, so first of all, make your table. You will need, let's give the heading first, computation of, write down, computation of total income, computation of total income of Summer for previous year 22-23, assessment year 23-24. Now make a 3-columnar table. You will need a broad column for particulars, a narrow working note column, and finally an amount column. All right, now let's begin. So they've given us a P&L account. So obviously my assessee will have PGBP, right? So under particulars, write down PGBP. But wait, before I proceed, Yogendra is saying that my voice is breaking. Is it so for everybody? Is it smooth? It's fine, right? So Yogendra, I think you have to check at your end. So under particulars, first of all, talking about PGBP, give reference to working note number 1. All right, leave easily some 10 to 15 lines, because you have to write all the other heads and you'll also have to do the tax calculation. So leave easily around 15 lines and then start the very first working note with the heading PGBP. Now, under PGBP, I have to write about the conclusion which I made about 44 ADA. Otherwise, examiner may think I did not even think about it. So I will write that note first. So write down, assessee is an interior decorator. Assessee is an interior decorator. That is, he is rendering a specified profession. But his gross receipts exceed rupees dash. Hence, presumptive taxation under section dash cannot be applied. Please fill in the blanks, guys. His gross receipts exceed how much? His gross receipts exceed rupees 50 lakhs. Therefore, presumptive taxation under section 44 ADA cannot be applied. See, what if his gross receipt number, what if this number was within 50 lakhs? Then I would have forgotten about allowances and disallowances. I would have straight away calculated dash percentage of gross receipts as PGBP. What percentage? Under 44 ADA, how much is PGBP? What percentage of gross receipts? Come on, guys, tell me. 50%. Perfect. So had my assessee applied 44 ADA, had he fit under 44 ADA, I would have applied 44 ADA and I wouldn't have bothered about allowances and disallowances. And under 44 ADA, 50% of my gross receipts is PGBP. So, but then I cannot do all of that over here because my assessee's gross receipts exceed 50 lakhs. So, which means I will calculate PGBP without applying presumptive taxation in the normal usual route. Now, you tell me, as soon as you see a P&L account, we have net profit number, immediately what comes to your mind? How do I calculate PGBP? Do the 5 steps come to your mind? Net profit as per P&L account, add expenses debited but not allowed, then add incomes not credited but taxable, then subtract expenses which are not debited but allowed, and then subtract incomes which are credited but not taxable. Yes, so let's do that. Write down net profit. Let's make our format net profit as per P&L account. Okay, just make the format and then we'll keep filling in the numbers below them. Then write down add expenses debited but not allowed. Leave probably some 8 lines under this. Then after this, add incomes not credited but taxable. Not credited but taxable. Leave 2 lines probably. Then less expenses not debited but allowed. Leave another 2 lines under this. And finally, less incomes credited but not taxable. So now my table is ready. Now, as I read through the question, wherever I think an adjustment is required, I'll keep fitting in the adjustments. Okay, let's come to the question now. See, we always see the credit side first because credit side is easier. Consultancy charges, anything to be done with consultancy charges? No, it is taxable. It is relating to my assessee's profession and it is already credited to the P&L, so I have nothing to do. Then interest on PPF account, where should I put this? This is first of all not relating to my assessee's PGBP. So first of all, I have to remove it from PGBP. It's already credited in my P&L. How do I remove a credit? Where will I subtract it? Less incomes credited but not taxable, guys. Yes, it is an income which is credited but it is not taxable under PGBP. So I'll remove it over here. Write down PPF interest. How much is it? It is rupees 60,000. So I'll remove this from my PGBP computation and I'll take it to which head? Which head will PPF interest go to? It will go to the IFOS head. So come back to your main answer. Under particulars, write down IFOS. Open another working note number 2. After your first working note, leave some gap of probably 4 to 5 lines. Open the second working note with the heading IFOS, and under this write down PPF interest. Now you tell me PPF interest, what's a tax treatment? Is it exempt or is it taxable? PPF interest comes to the IFOS head, but it is always fully exempt. So it is not going to be taxable. But did you notice? I still wrote it down. I still put it into the working note to tell the examiner that I know it is exempt. It is exempt. If I don't write it over here, the examiner might think that I forgot about it. So I need to always make sure I spoon feed the examiner as much as possible. All right. So this was about my interest adjustment. Then interest on savings bank account. Tell me, is this relating to the business of my SSC? Again, it is not. So I have to remove it from my PGBP. Again, how will I remove it from the PGBP? Same thing, guys. Less incomes credited but not taxable. I have bank interest. How much is the savings bank interest of my SSC? 20,000. I will remove this from PGBP and I will take it to which head instead? Again, I will bring it to the IFOS head. So here we have savings bank account interest. How much is the interest? 20,000. This is going to be taxable. But as soon as you hear savings bank account interest, something else should also come to your mind. Does anything else come to your mind? Very good, guys. Chapter 6A, section 80TTA. But why not 80TTB? My assessee is not a senior citizen. You apply 80TTB only to senior citizen assessees, right? So here my assessee is not a senior citizen, so I will apply 80TTA instead. So make another working note, call it working note number 3, give the heading chapter 6A. Are you noticing as and when I'm coming across adjustments, I am opening relevant working notes. Okay, so under chapter 6A, write down section 80TTA, saving bank account interest. But what's the maximum deduction which I will allow over here? At the maximum, I can give you only 10,000. Okay, so this is about my savings bank interest. Then interest on national savings certificate 8th issue for the 3rd year. First of all, is it relating to the business of my SSE? No, it is not relating to the business of the SSE. So again, I have to remove this from the PGBP. And how will I remove it? Same way, I'll subtract it. So less incomes credited but not taxable. Over here, NSE interest. How much NSE interest did we earn? 21,000. It is not relating to the business of my SSE. I will remove it from PGBP and instead I'll take it to which head? I'll again bring it to the IFOS head. So over here, we will have NSE interest of how much? We'll have NSE interest of 21,000. But there is something else I'm supposed to do with NSE interest. Any idea? Very good. I'm supposed to take it to 80C because NSE interest is always considered to be reinvested into NSE. If I put any money into NSE, National Savings Certificate 8th issue or 9th issue, I get deduction under 80C. It is always deemed that whatever NSE interest I get, it is again reinvested into NSE. So under chapter 6A, I will get a deduction under section 80C. So what I will do, and where does 80C go under? Which section does 80C go to? It goes to 80CCE. So I'll straight away start another section, probably point under chapter 6A for 80CCE, and I'll show the calculation here itself. 80CCE will include 3 sections, guys. It will include section 80C, it will include section 80CCC, and it will include 80CCD subsection 1. So right now I have NSE 8th issue. NSE 8th issue will go under which of these? NSE 8th issue will go under section 80C. The amount is 21,000. Understood, everybody? Yes, till here are we clear? NSE 8th issue, I first of all removed it from my PGBP, then I taxed it under IFOS, and I brought it also under section 80C. Okay, so this is it about my credit side. Now looking at the debit side, employees' remuneration and benefits relating to my SSE's business, nothing to do. Office and admin expenses, again relating to my SSE's profession, nothing to do. General expenses, we'll assume it is relating to my SSE's profession, hence again nothing to do. Electricity expenses also will assume relating to assessee's profession, but medical expenses don't look like a business expense because my assessee is an interior decorator. So obviously medical expenses are not his professional expense. Don't you think they are personal expenses? So what am I supposed to do over here? I'm supposed to disallow. I'll add back, right? Because it is debited to my P&L account, but it is not a business expense. It is debited, but it is not allowed. So I'll add it back over here. Add expenses debited but not allowed. Medical expenses, what is the amount, guys? The amount is 80,000. I'll add it back. Understanding. Then purchase of furniture. Purchase of furniture. This is a capital expenditure. Can I debit this to my P&L account? Of course not. Instead, I'm supposed to claim depreciation. So I will first disallow this. I'll first remove this from my P&L and then I will claim depreciation. How do I remove a debit from the P&L? I add it back. So add furniture. Furniture, how much is debited to the P&L? 48,000. I'll add it back, but then I will remember to give depreciation. So less expenses not debited but allowed. Over here, I will give depreciation on furniture. But how much will I calculate? How will I calculate the depreciation? Depreciation on furniture is at what rate? It's at the rate of 10%. So 48,000 into 10%. Let's assume put to use for all 180, at least 180 days. So that's going to give me 4,800. See, listen, I haven't read the adjustments till now. So there may be a possibility that I have an adjustment relating to these points. I should be prepared that I can always rectify them. I can always correct them later in case I've made a mistake. But as of now, as I come across the adjustments one by one, I'll keep making the necessary adjustments. Okay, so furniture 48,000, 10% depreciation. I gave the full 4,800. Then this depreciation, I'll assume it is as per P&L account. And then we have excess of income over expenditure. What is income over expenditure? Nothing but a net profit number. So how much is the net profit? 39 lakhs 43,000. So come back to the main answer. 39 lakhs 43,000. Now Nihal is asking us a question that shouldn't we take medical expenses under 80D? No, we don't know as of now whether the medical expenses are for his own treatment, for somebody else's treatment. We don't know. If they are for his own treatment, he's only 43 years old. When will you get medical expenses as a deduction under 80D? You will get medical expenses as a deduction under section 80D only if the medical expenses are incurred for a senior citizen who doesn't have medical insurance policy. Right? So we don't know all that information as of now. For now, this is a personal expense. Hence, I am disallowing. Okay, so we're done looking at our P&L. Now come to the other information. Expenses on employees' remuneration and benefits includes family planning expenditure of 20,000 incurred for the employees, which was revenue in nature. The same was paid through account pay check. What do you think? Is there anything I should do with this over here? What do you think? Anything that I should do relating to this? I should disallow. Very good, guys. Perfect answer. I should disallow. Why should I disallow? Because family planning expenditure is allowed as deduction only for companies, right? Only for corporate assessees. But who is my assessee? My assessee is an individual. Hence, family planning expenditure will not be allowed for individuals. It will be disallowed. So I will fully disallow it. Had it been a company, revenue expense I will fully allow. Capital expense I will allow 1/5 across 5 years. Yes, but here it's an individual, and hence I will not allow the family planning expenditure. It is already included in employees' remuneration and benefits. If you remember, it is already debited to the P&L account. And how do I remove the debit now? How do I remove the debit, guys? I'll again add it. I'll disallow it. So add expenses debited but not allowed. Over here, write down family planning expenses. Give the reason disallowed because assessee is a non-corporate assessee. In other words, assessee is not a company, guys, and that is why I am disallowing. So how much will I disallow? The entire amount. What is the amount? Amount is here. Amount is 20,000. I'll disallow the entire 20,000. Then payment of salary of 25,000 per month to a sister-in-law of Mr. Summer, who was in charge of the accounts and receivables department. In comparison to similar work profile, reasonable salary at market rate is 20,000 per month. They're saying reasonable salary is 20,000 per month, but we have paid 25,000 salary per month. Anything to do over here? They're paying excess salary, we're paying unreasonable salary. What am I supposed to do? Section 40A2 may be coming to your mind. You may be thinking this is excess unreasonable payment, so disallow 5,000 per month. That is what you would be thinking. But wait, you do that only if I make a payment to a relative. And who is relative under section 48(2)? If I am the assessee, relative would be my spouse, my brother, my sister, my lineal ascendant, and my lineal descendant. And who am I making the payment here to? To my sister-in-law. Sister-in-law would be my brother's wife. See, my brother is covered in the definition of relative, but his brother's spouse covered. No. So they are trying to make us think about 48(2). They're giving us information in such a way that we will disallow 5,000 per month. But good learning for many of you over here, I will not disallow 5,000 per month because sister-in-law is not relative. We disallow only if we make an excess and unreasonable payment to a relative. Did you understand this? Meenakshi, Lakshmi, Asna, Vidarshana, did all the four of you understand this? Yes, I disallow only if I make an excess payment to my relative. Here, I am not making an excess payment to my relative. It is an excess payment, but it is not to a relative. And that is why I am not going to disallow the 5,000. Okay, so write down under add expenses debited but not allowed. Write down section 48(2). We'll give the reason that why didn't we disallow. Write down excess salary paid to sister-in-law. Excess salary paid to sister-in-law. Under amounts column, write down 0. Give reference to working note number 4. Okay. And after your third working note, open another working note number 4. Give the heading section 40A subsection 2 disallowance. And under this, please write down as I call out. Assessee has paid excess salary to his sister-in-law. Under this next line, write down such excess or unreasonable expenses are disallowed only if the payment is made to a relative. Continue writing. Relative includes spouse, brother, sister, lineal ascendant and lineal descendant. Next line, write down as sister-in-law is not a specified relative, excess salary will not be disallowed. Excess salary will not be disallowed. Are we crystal clear with this? Yes, no doubt I'm paying excess salary, but it is not to a relative and hence I don't disallow. Okay, so this is it with my first adjustment. Now let's go to the second adjustment. Amount received by Mr. Summer as employees' contribution to EPF. Employees' contribution to EPF for the month of February rupees 10,000 was deposited after the due date under the relevant act relating to EPF. Now, let me explain the provision relating to this to you first. See, listen, there is a rule. The rule goes like this. In case my assessee, see, my assessee is the employer, okay? If my employer assessee is receiving from the employee's contribution to PF, okay? What you're supposed to do is, for the assessee, you first tax it, whatever is the employee's contribution to PF that we have received from the employee, we first tax it under section 22410, we first tax it. Then how much ever the employer has paid to the PF authorities, within which due date, within 139(1) due date or within PF due date? Which due date am I supposed to check? I'm supposed to check within PF due date. How much ever the employer has remitted to the PF authorities within the PF due dates, that much alone will be allowed. It will be allowed under which section? Under section 36(1)(5)(a). So first of all, we add the entire amount, whatever the employee is contributing to the employer, the entire amount you first tax it, okay? Then out of that, how much ever is paid within 139, within a PF due date, that alone you allow. Now in this case, how much is the employee's contribution? The employee's contribution is 10,000 rupees. I will first tax it. So add incomes not credited but taxable. Why under this? Because I'm going to assume it to be income. I'm going to tax it as an income. So section 22410, employees contribution to PF, I will first tax the entire amount, guys. I'll first tax the entire 10,000, and then how much ever is paid within PF due date, that alone I will allow. How much is paid within PF due date? The question says it is deposited after the due date. So will I allow anything under 36(1)(5)(a)? Will I allow anything at all? No, I will not. I will not. All right. So any amount, and under employees contribution to PF, any amount that my employer receives relating to employees contribution to PF, I first tax it under 22410, and then I allow it under 36(1)(5)(a). I allow under 36(1)(5)(a) only if you made the payment within PF due date. Here I did not make the payment within the PF due date, hence I will not allow anything. Okay, that's it about this adjustment. Come on guys, let's proceed forward. Then they're giving us information about medical expenses. Medical expenses rupees 80,000 appearing in the income and expenditure account. Do you remember we had medical expenses here, 80,000 medical expenses we had over here, we had disallowed saying it is personal expense. Now about that they're giving us information. It was expensed for the treatment of father of Mr. Summer. It was expensed for the treatment of father of Mr. Summer. His father was 72 years old and was not covered by any health insurance policy. The said payment of 80,000 rupees was made through an account pay check. Guys, what to do with this? This will go under 80D, right? This will go under 80D. My assessee has incurred medical expenses on the treatment of his father, who is a senior citizen, through account pay check. And his father does not have any medical insurance policy. Listen, let me help you understand this. If my assessee has incurred any medical expenses, okay, on the health of his own self, or on the health of his spouse, or on the health of his dependent children, or on the health of his parents, okay, and if they should be also senior citizen. The person on whose health he is incurring medical expenses, they should be senior citizen, and they should not be having any medical insurance policy. Then whatever medical expense you have incurred, even this medical expense you will get as a deduction under section 80D. You are incurring expense, you're incurring medical expense on the health of a senior citizen. That senior citizen does not have medical insurance policy in his name. So medical expenses also will be allowed under 80D. Here, yes, we are paying for a senior citizen. And the question also says that the father does not have a medical insurance policy, and his father covered under 80D, guys. Yes, who and all is covered under 80D? Self, spouse, dependent children, and parents, right? So parents are covered under 80D. So can you tell me what's the general limit? What's the usual limit under 80D? The usual limit is 25,000. But if I'm going to claim deduction for any expenditure relating to a senior citizen, there the limit will become 50,000. So even though it is 80,000, I will claim deduction under chapter 6A for rupees 50,000. So leave 3 to 4 lines under ATCCE. We don't know. We might have some more expenses here. Write down after this section ATD. Under ATD, how much? Even though it is 50,000, even though it's 80,000, I will allow only 50,000. How come 50,000? Because senior citizen. Okay, senior citizen, no medical insurance policy, even medical expenses will be allowed under ATD. I hope you're all following. Is this crystal clear, this adjustment? Then listen to my next adjustment. General expenses appearing in the income and expenditure account includes a sum of 25,000 paid to Miss Angeline on 5th Jan 2023 as commission for securing work from new clients. This payment was made to her without deducting tax at source. Guys, we have made payment, we have paid general expenses, we have paid commission of 25,000 without deducting tax at source. Which section comes to your mind? You're supposed to disallow under section 40A1A, under section 40A1A. But listen to me, you never straight away disallow under 40A1A. You first check whether TDS is actually required or not. Only if TDS is required for the assessee should you subtract the TDS. See, it is commission. So under which section should you have subtracted TDS? It is commission. So you should have subtracted TDS under section 194H. You should have subtracted TDS. Under 194H, how much can you pay without deducting tax at source? Under 194H, you can pay 15,000 without deducting tax at source. Here I have paid 25,000. I have paid more than 15,000. First of all, is that clear? So I should have deducted tax at source at what rate? I should have deducted tax at source at the rate of 5%. I did not deduct. And one more thing, who is my assessee? My assessee is an individual. When does an individual have to deduct tax under 194H? One of the hijack sections, guys. So hijack sections, when does individual and HUF have to deduct tax at source? Only if preceding previous year turnover was more than 1 crore. Only if preceding previous year gross receipt was more than 50 lakhs, remember? So don't you think we have to check that also? Yes, see, is there any adjustment relating to that? Any adjustment? Here, we have one adjustment relating to that. Gross professional receipts of Mr. Summer for preceding previous year, 21-22, was 52 lakhs, which is more than 50 lakhs. Are you understanding? All this thinking has to happen, which indicates that TDS was first of all applicable for my assessee. Because TDS is applicable for my assessee did not deduct tax and hence I'm going to disallow. If any of these conditions were not fulfilled, let's say this was less than 15,000, or let us say assessee's gross receipts preceding previous year was less than 50 lakhs, then I wouldn't disallow under 40A1A. So you first check whether TDS is applicable or not, only then you disallow. Okay, so come back to your PGBP calculation. Write down section 40A1A commission. Give reference to working note number 5. After your fourth working note, just give me a moment. Yeah, listen. So after your fourth working note, put down working note number 5. Give the heading section 40A1A. Okay. And under this, please write down assessees preceding previous year gross receipts exceed rupees 50 lakhs. Then next sentence. Assessee has paid commission exceeding rupees 15,000. Therefore, he should have deducted tax. He should have deducted tax under section 194H at the rate of 5%. Next point. As he did not, disallowance under section 40A1A. Guys, do I disallow the entire expense? No, I disallow only 30%. So disallowance under 40A1A, show the calculation, please. The expense is 25,000. So 25,000 into 30%, which is going to be how much? 7,500. Okay, you have to write all of this. Only then will the examiner know that you've checked all this. So never straight away disallow under 40A1A. Got it, guys? You first check whether TDS is actually applicable or not. Only then you disallow. So come back to your PGBP working note. Add expenses debited but not allowed. Section 40A1A. I will add back 7,500. Okay, so that's it about this adjustment. Then WDV of depreciable assets on 1st April 2022 was as follows. Why have they given us a WDV number? What do they want us to do? They want us to calculate depreciation. So you make another working note. Okay, let's call it working note number 6. Working note number 6, give the heading depreciation. Okay. Now, first of all, guys, we are going to calculate depreciation, which means this depreciation which they have given to us in the P&L is not as per Income Tax Act. Can I say that? Yes. So I will disallow this. Don't you think I will add this back? So come back to your PGBP working note, add expenses debited but not allowed. I will add back the depreciation which is debited to my P&L account. How much is debited to my P&L account? 90,000. I'll add that back because I am calculating depreciation now, which means this number is not as per Income Tax Act. So instead, under less expenses not debited but allowed, write down depreciation. Depreciation on what are we calculating? On books and computers. Depreciation on books and computers. Give reference to working note number 5. Now come to not working note number 5, working note number 6. Working note number 6. Okay, come to working note number 6, depreciation. Now tell me on books, how do you calculate depreciation? At what rate do you calculate depreciation? At 40%. So show the calculation, 90,000 into 40%, and that's going to be 36,000. Okay, then on computers, how do you calculate depreciation on computers? Even on computers, 40%. So 35,000 into 40%, how much is that going to be? That's going to be rupees 14,000. So what's the total depreciation on books and computers now? It's going to be totally 50,000. Okay, so come back to your PGBP calculation. Depreciation on books and computers, please subtract 50,000. All right, this is also done. Then they're giving us information about the furniture. New furniture appearing in the income and expenditure account. Do you remember we had disallowed the furniture and we had taken 10% depreciation? They're giving us information about that. It was purchased on 31st August and 2022 and it was put to use on the same day. 31st August, guys, if it is put to use on 31st August, it's definitely going to be at least 180 days. So yes, I can get full year's depreciation. So come to your furniture point and write down over here at least 180 days. So it indicates you've checked that yes, you've put the furniture to use for at least 180 days. Then after that, what else? The question says payment was made as under rupees 18,000 paid in cash at the time of purchase of new furniture. On this 18,000 depreciation. No, more than 10,000 you have paid in non-specified mode. On this 18,000, I will not give you depreciation. Then 19,000 paid by account payee check on 5th September 2022 as balance cost of new furniture. On this 19,000, can I claim depreciation? Yes, I can claim depreciation on 19,000 because more than 10,000 I have paid in specified mode. Then rupees 11,000 paid in cash on 31st August 2022 to the transporter as freight charges for new furniture. Even this I will not consider because I have paid in cash. More than 10,000 I have paid in cash. I have paid in non-specified mode. Therefore, I will claim depreciation only on 19,000. Guys, listen, I cannot apply 48.3 over here because 48.3 I apply only for expenses. I apply 48.3 only for my business expenses. Here I am talking about not even claiming depreciation, which means I'm saying how much will enter the block of asset. How much will enter the block of asset, guys? Only 19,000 will enter the block. I am talking about section 43. I'm talking about the actual cost calculation. You will not apply 48.3 because 48.3 you apply only for expenses. Here I'm talking about an expense entering into the actual cost, an expense entering into the block. Into the block of asset, you don't apply 48.3. 48.3. 48.3 is only for business expenses. Okay. So, and how much will enter the block? Only 19,000 is going to enter the block. But on how much did I claim depreciation already? I've claimed depreciation on 48,000. So correct it, please. 19,000 into 10%. Do not worry if you have to do something like this. It is okay, it is allowed. All right, so 19,000 I will allow. Wait, those of you who are saying transporter limit is 35,000, I'll come to that, please wait. So 19,000 into 10%, I will claim 1,900. Now all those of you who are saying transporter limit is 35,000, isn't it 35,000 limit only under 48.3? That's why I'm telling you, you can't apply 48.3. Only 48.3 says that if it is transporter, you can claim 35,000. Up to that, you can, pay in whatever mode you want. Here, I am not applying 48.3. Are you understanding, Shafina and Srijit? I am not applying 48.3 over here because this is not a business expense. Instead, I'm talking about actual cost. I'm talking about what will enter my block. What will enter my block? 48.3 will not apply. Only 48.3 says that if you're paying for transporter, you can pay up to 35,000 in whatever mode you want. Only 48.3 says that. But section 43, the actual cost section, talks only about one number. What is that one number? Only 10,000 it talks about. It doesn't give different number for transporter and all. Only under 48.3 it talks about 35,000 number for transporter. So that is why I'm not going to consider this 11,000. Okay, so 19,000 into 10%, 1,900. A very good question, guys. I'm sure even this must have been a good learning for many of you. As soon as you saw transporter, you must have thought about the 35,000 limit. But I will not apply the 35,000 limit here because I'm not disallowing under 48.3. Okay, then Mr. Summer purchased a car on 2nd April 2021 for 3,35,000 for personal use. However, on 30th April 2022, he brought the said car for use in his profession. So guys, still this date, I wouldn't have given any depreciation on this car. But now that he is bringing this car for use in profession, now I can give depreciation on this car. Yes, FMV of the car on 30th April was 2,50,000. Tell me, I will calculate depreciation at what rate first of all? Very good. The rate is going to be 15%. But 15% of what? 15% of 3,35,000 or 15% of 2,50,000? 15% of 3,35,000. You always take the depreciation as a percentage of the actual cost. But had it been building, what would you do? Had it been building, you would have subtracted deemed depreciation, right? Had it been building, you would have imagined what if it was used for a business or profession all these years. You would have calculated deemed depreciation. On that basis, you would have calculated the depreciation. But here, anyways, it is car. So straight away on 3,35,000. We already have a working note for depreciation. Over here itself, we can put depreciation for car also. How much will it be? It's going to be 3,35,000 into 15%. That's going to be 50,250. So what's my total depreciation now? Total depreciation is 1,250,000. So come back to your PGBP working. Under less expenses not debited but allowed, you can add car also. So not 50,000, total is going to be 1,250,000. This is going to be my total depreciation on books, computers, and car. On 3,35,000, I simply claimed depreciation at the rate of 15%. Okay, so even this is done. Then Mr. Summer made a contribution of 1 lakh in PPF. Where will PPF go to? Very good, ATC. So an ATC will go to ATCCE. So PPF, how much do we have? We've contributed rupees 1 lakh. All right, that's it, guys. No other adjustments. Let's go ahead and close all our working notes one by one. First of all, close the PGBP working note. What's the total PGBP of my assessee? Do the math. How much do you get? Do you get this number? 39,95,350. Yes, come back to your main answer. PGBP 39,95,350. Okay, then your total IFOS is 20,000 plus 21,000, which is 41,000. Go back to your main answer. IFOS 41,000. No other income we have. So what's the GTI of my assessee? GTI is going to be 40,36,350. Then I have chapter 6A, guys. So should I split this GTI into two numbers? See, why am I talking about GTI number? Why am I talking about splitting? I'm talking about splitting because if I had special rate income like capital gains or lottery income, then I would have subtracted chapter 6A only against normal rate incomes. So do I have any special rate income? No. So I can claim chapter 6A against this entire number. So less chapter 6A. Chapter 6A was which working note? Working note number 3. Let's close this working note. So total ATC deduction is 1,21,000. ATCCC is 0. ATCCD subsection 1 is 0. So what's my total here now? Total is 1,21,000, which is within how much, guys? Which is within the limit of 1,50,000. So write down within limit of rupees 1,50,000. So you can claim 1,21,000 here. So what is your total chapter 6A now? Total chapter 6A is 1,81,000. Come back to your main answer. Chapter 6A reference to working note number 3, 1,81,000. So my total income is going to be 38,55,350. No hurry, Priya. 1,81,000 only, no? Because I have this 10,080 TTA also. Did you forget this, Hari Priya? 121, 131, 131 plus 50, 181 only. All right. So we're done with the total income calculation. So after this, what do we do? The tax liability. They're asking us to calculate tax liability also. So below this, write down computation of tax liability. They're asking us to forget about 115 BAC and all. So just normal usual taxation. There is absolutely no special rate income and all. So I will calculate the tax straight away on this number. I'll calculate basic tax first. Up to 10 lakhs, you anyways have to pay how much? Up to 10 lakh, you anyways have to pay 1,12,500 plus 30% of whatever income you have in excess of rupees 10 lakhs. So how much is this going to be? This is going to be 9,69,105. And says at the rate of 4%. I hope I'm clear now. There might have been a small disruption earlier, but I hope it's clear now. My says is going to be 38,764. So total tax is going to be 10,07,869, which I have to remember to round off. So rounded off to 10,07,870. All right, guys. Yes, I think this was a very good question. We had quite a lot of learning. What are the things we learned through this? First of all, we spoke about our very first learning was about 44 ADA. We said we will not apply 44 ADA because my SSC's gross receipts exceed 50 lakhs. Then after that, we spoke about family planning expenditure. This is something that we will allow only for company SSCs. Then 48.2 was a good learning. Again, this is going to be disallowed only if the excess payment is made to a relative. And relative includes spouse, brother, sister, lineal ascendant, lineal descendant. Then 48.1a, we said you should never disallow blindly. You should first check whether TDS is applicable or only then we should disallow. Then we learned that under section 224.10, I first of all add back, whatever employee's contribution my assessee has received, I will first add it back. And in your syllabus, we generally talk only about PF Nihal. All right. So under section 224.10, I will add back the entire amount. I'll add back how much ever the employer has received from the employees. I will first tax it. I'll first tax it under 224.10. Only how much ever is paid within PF due date, only that I will allow under 36(1)(5)(a). Then after that, any other learning that we had, PPF interest will go to IFOS and will be exempt. NSE interest will be taxed under IFOS, but I will also get ATC deduction because NSE interest is always deemed to be reinvested. Okay. And then after that, we also discussed that ATC will come under ATCCE. So ATCCE says ATC plus CCC plus CCD1 put together should not exceed 1,50,000. And we also had a good adjustment over here under ATD, medical expenses relating to a senior citizen who doesn't have a medical insurance policy. Even medical expenses I can allow under ATD. All right. So these were our learnings through this question. Shall we close this question? Shall we proceed forward to the next question? Yes. Yes, guys, come on. Let's go to question number 2. Are you ready, guys? Yes, come on. Question number 2 is going to be a November 2022 examination question. Again, a very good question. It has beautiful adjustments. There's going to be a lot of learning through question number 2. All right, let us read the question. Let us see what exactly they have asked us. Dr. Rohan, 82 years old resident surgeon. Here itself, I can conclude something. I can conclude that my assessee is a super senior citizen, right? He has a nursing home in Mumbai. He gives the following particulars. Guys, he has a nursing home, which means it's going to be, he's a doctor. Again, does something come to your mind? Specified professional. So what will you check? You will check section 44 ADA presumptive taxation. You will look at his gross receipts. If his gross receipts are within 50 lakhs, then you can apply presumptive taxation under 44 ADA. Same thing which I told you even in the last question. Here, but they haven't given us P&L account. Instead, what have they given us? Receipts and payments account. If they give us receipts and payments account to calculate PGBP, can I use the 5 steps? What we just did? No. Because I don't have the net profit number with me. So instead, how will I calculate my PGBP? I'll take the taxable incomes. I'll subtract the allowable expenses. I'll get my PGBP. You're understanding. So the earlier question we worked out was calculating PGBP using the 5 steps. But in this question, we're going to calculate PGBP without using the 5 steps because we can do the 5 steps only if we have the net profit number. We do not have the net profit number here, hence I cannot use the 5 steps. So I'll straight away take all my taxable incomes and from that I'll subtract all my allowable expenses and that will give me PGBP. Income minus expenses, it will give me PGBP. Okay, now look at this. Let us conclude this. Can I apply 44 ADA for my assessee? What are his gross receipts? 5,85,000, 85,000. His gross receipt, his fees from visits and all, if you see, fees received during the year. I mean, even if I add up his entire receipt side, even if I add up everything, is it exceeding 50 lakhs? See, obviously, I'm not supposed to consider the entire thing. I'm just trying to do some quick math before I can start working out the answer. I'm thinking from exam perspective. In the examination, how am I going to think? Even if I consider all his receipts, it doesn't look like my assessee has. Guys, what happened? There was a disruption. Am I audible? Is there a disruption, guys? It's smooth, right? Yeah, listen. So, what was I telling you all? Oh yeah, we were talking about 44 ADA. So I'm thinking, had I been in the examination, how would I have thought? I would have thought, even if I look at all my gross receipts, it doesn't exceed 50 lakhs. So definitely 44 ADA, I can apply, guys. Gross receipts are within 50 lakhs. So keep that in mind. 44 ADA is applicable to me. Guys, it seems to be getting stuck for me. Give me one moment. I'll be right back. I hope it's audible now. I was using the hotel's Wi-Fi, so that's why it was getting stuck for me. But I think it should be perfectly clear now, like earlier. Fine. Listen now. So I was discussing with you about this question. Question number 2 we were working about. Now listen. So we were discussing, even if I consider all the gross receipts, it does not exceed 50 lakhs. So which means I can think about 44 ADA. Keep that in mind and look at the next adjustment. The question says he keeps his books of accounts on cash basis and has not opted for the provisions of 44 ADA. So what to do now? We concluded that we can apply 44 ADA. We said that his gross receipts are not exceeding 50 lakhs, but the question doesn't want us to apply 44 ADA. The question says he has not opted for 44 ADA. If 44 ADA is applicable, but you don't opt for 44 ADA, then you will have to maintain your books of accounts under 44 AA. You will also have to get your books of accounts audited under 44 AB. Right, guys? Are you all understanding this? Guys, please confirm. Why am I getting no answers in the chat box? Are you all there? Yes. Right. So I cannot apply 44 ADA because my assessees clearly doesn't want to apply 44 ADA. But did you understand the entire analysis? We'll have to write down all of that. All right. Then they're giving us more adjustments. Finally, what are they asking us? Compute the total income and tax payable by him for assessment year 22-23 as per regular provisions of the Income Tax Act. Assume he has not opted for 115 BAC. Okay. Then what will be his total income and tax payable if he opts for 44 ADA, and which will be more beneficial? So without 44 ADA, with 44 ADA, we're supposed to give both the answers. So let's get to work. First, we will compute total income. Normal usual route. Without 44 ADA, we will compute. So answer to the second question, give the heading computation of total income in brackets without section 44 ADA, previous year 21-22, assessment year 22-23. We are doing the calculation for year ended 31st March 2022. So we're doing the calculation for 21-22, assessment year 22-23. Take 3 broad column, then a working note column, account. My assessee, the doctor, he's a specified professional. So clearly we will be having PGBP. So under PGBP, we cannot apply the 5 steps. We will be calculating PGBP. We will just take the taxable incomes. We will subtract the allowable expenses and we'll get a PGBP number. All right. So under particulars, write down PGBP. Give reference to working note number 1. Leave easily, I would say, 15 lines gap. The reason being, we have to show the total income calculation, we have to show the tax liability calculation, we have to show with 44 ADA, without 44 ADA, all of that we have to show in our main answer. So leave easily some 15 to 20 lines gap, okay? And then start the first working note number 1, PGBP. PGBP in brackets, write down without section 44 ADA. Why without 44 ADA? Because my assessee doesn't want 44 ADA. Even though 44 ADA is applicable, the question says doesn't want 44 ADA. So we will take all the taxable incomes, we will subtract allowable expenses. We can't apply the 5 steps. You understood that? We can't apply the 5 steps. Why? Because my assessee doesn't have we don't have the net profit number over here. So we'll just take the taxable receipts. We'll subtract the allowable expenses. Now look at the receipt side. What are the taxable receipts? Fees from visit to other hospitals net. This is a taxable receipt, guys. This is a professional receipt. Yes, so I can consider this, but then it says net. So what am I supposed to do? I am supposed to gross it up. Under which section would they have deducted tax for me? They would have deducted tax for me under section 194J, professional fees, guys. And it is clearly more than 30,000, so they would have definitely deducted tax at source. At what rate would they have deducted tax at source? At 10%, they would have deducted tax at source, because it is more than 30,000. They would have clearly deducted tax at source. So write down under PGBP, fees from other hospitals. Show the calculations. 5,85,000 into 100 by 90. How much is that going to be? 6,50,000. All right, guys. So this is my gross fees. Then fees for March 2021 received in April 2021. Can I consider this also? It is the preceding previous year's receipts. Yes, they have given us receipts and payments account, which means my assessee is following the cash basis of accounting. In cash basis of accounting, when do you tax an income? Only when you actually receive it. And when do you allow an expense? Only when you actually pay for it. Right? So even though the fees is belonging to some other year, I will still tax it in the current year, because they have given us receipts and payments account, which indicates my assessee is following cash basis of accounting. So in cash basis of accounting, I tax incomes only upon receipt, irrespective of which year they belong to. So even preceding previous year's receipts, I will consider. But do I have to gross up this also? No, the question does not say that this is gross receipt. The question just calls this as fees. The question doesn't use the word net, so I will not gross it up. So write down fees of March 2021. What's the amount? 85,000. I'll tax it as it is. Then dividend from shares net 18,900. What about this? Which head will this go to? Dividend will go to the IFOS head, but under IFOS, they are again using the word net, guys, which means I have to gross it up. Under which section would they have deducted tax? They would have deducted tax under section 194 TDS. Very good, guys. Section 194, they would have deducted tax. At what rate would they have deducted tax? At 10%. See, under section 194, how much dividend can we pay without deducting tax at source? We can pay up to 5,000 in non-cash mode without deducting tax at source. Here we have paid more than 5,000 clearly. So we should have deducted tax at source. At what rate? At 10%. Under which section? Section 194. So and here they have given us a net number. So we will of course gross it up. But under which head? Under IFOS. Okay. So come to your main answer. All right. Main answer. Write down over here IFOS. Give reference to working note number 2. After your first working note, open working note number 1, leave enough space, okay? Leave easily like around 10 lines maybe, okay? Then after your first working note, open the second working note, give the heading IFOS. Under this, write down dividend. Now dividend, what is the amount? 18,900. This is net number, so I will gross it up. 18,900 into 100 by 90. Under 194, not 193. Under section 194, they would have deducted tax at source. They would have deducted tax at the rate of 10%. So that is why 100 by 90. So that is going to be 21,000. 21,000 is going to be my gross dividend. Okay. Then what else? After this, fees received during the year. Even this will come to my PGBP calculation, current year fees. All right. So write down over here fees of current year. How much is it? 10,25,000 taxable. Then gift receipt from relatives of patients. Tell me about this. Where will this go? It's gift. It will go to which head? See, if I get gifts from my employer, it will come to the salaries head. If I get gifts relating to my business or profession, it will come to my PGBP head under 28.4. If it's any other gift only, it will then go to IFOS. Don't this is gift relating to my business or profession. Don't you think this is gift relating to my profession, because gift received from relatives of patients, guys? So it is relating to his profession as a doctor. Hence, it will come to the PGBP head, and under PGBP head, it will be taxed under section 28.4. Okay, so come back to your first working note. Under first working note, section 28.4, gifts from patients' relatives. What's the amount? 45,000. You're understanding? Every gift does not go to IFOS. If I'm getting the gift from the employer, it will go under salaries. If I'm getting the gift relating to my business or profession, it will come under PGBP 28.4. If I'm getting any other gift, it will go to the head IFOS. Here, I'm getting a gift relating to my business or profession. Why do I say relating to my business or profession? Because it is from relatives of patients. So it is relating to my assessee's business or profession. So it will come to the head PGBP. Okay, it will be taxable under the head PGBP 45,000. Then honorarium for painting services in Jai Hind Art School. What about this? Which head will this go to? Honorarium always goes to the IFOS head, right? So come to the IFOS head and here write down honorarium. But guys, here also they've used the word net. Okay, but would the tax actually be deducted at source? See, honorarium for painting services, under which section would they have deducted tax at source? Painting services. So, section 194J, professional services, guys. 194J, they would have deducted tax at source. All right. Now, under 194J, but they would have deducted tax at source only if the amount is more than 30,000. But is it more than, even if you gross up and see 22,500, even if you gross up and see, it will be 25,000. So would they have deducted tax at source? They wouldn't have deducted tax at source. So even though they use the word net, I will not gross it up because it's anyways less than 30,000. They would have anyways not deducted tax at source. So I don't have to gross it up. But which head of income will this go to? IFOS. Under IFOS, honorarium, write down no TDS under section 194J as the amount is less than rupees 30,000. So guys, I'll tax this number as it is. I will not gross it up. You understood? I don't gross up blindly. Just because they use the word net, I will not gross up blindly. I will gross up only if it actually TDS would have been deducted over there. TDS wouldn't have been deducted over here under 194J for a simple reason being it's less than 30,000. Okay, so there's no need for me to gross up. Then income tax refund including interest 1,500. What to do with this? Income tax refund is not taxable at all, but interest on income tax refund is taxable. Under which head? IFOS. So under IFOS, interest on income tax refund. What's the amount, guys? 12,100. It's going to be taxable under IFOS. Now coming to my payment side, salary to staff. This is my business expense relating to my professional, expense relating to my professions. So I'll start subtracting, but before that, let me add up all my receipts. Have I made a mistake? Oh, guys, listen, please correct. Interest on income tax refund. You should be taxing just the interest portion. What's the interest portion? 1,500. Please correct it. Okay, now coming back to my PGBP, if you add up, what's the total receipt now, as of now? Total receipts are going to be 18,05,000. All right. Now, after this, so I'll subtract my expenses. My first expense was salary. How much salary are we paying to our staff? 3,50,000. Then taxes and insurance. Let's assume relating to my assessee's business or profession. Taxes and insurance, 26,000. Then we have entertainment expenses. This also we will assume is relating to my assessee's profession. Entertainment expenses, 1,00,000 10,000. All right. Then we have purchase of television. Television, I cannot subtract the entire amount because it is not relating to my assess. It is not a revenue expense. It's a capital expense. So I cannot subtract the entire amount, but instead I will subtract depreciation. I'll subtract depreciation on television. Now tell me at what rate will I calculate depreciation on television? Very good, 15%. Normal plant and machinery. So depreciation on television, show the calculation, 48,000 into 15%. We'll assume put to use for at least 180 days. So 48,000 into 15%, 7,200 depreciation I'll get here. Then gift to daughter-in-law. It's a gift which is given. So anything to be done with this. Will this go to IFOS? No, it is not gift received, only gifts received. As soon as you see the word gift, don't put it under IFOS. It is a gift which I have given to my daughter-in-law, which means it's a gift given, not a gift received. So this will not be taxed for my SSE. Then interest on loan for repair to property. What about this? We don't know which property is this. We'll assume this property is relating to the assessee's profession because the question doesn't say anything. Let us assume professional property relating to the assessee's profession. So we'll allow this under PGBP. So write down interest on loan relating to repairs. How much is the interest? 65,000. I am allowing it. I am assuming that the property is relating to my assessee's business or profession. Personal medical expenses, guys, will I allow it under PGBP? No. But can I claim ATD? My assessee is a super senior citizen. Okay, and it says personal medical expenses, which means for himself, he has incurred medical expenses. So if he doesn't have medical insurance premium, then I can put it under ATD. So right now, I don't know whether he has any other medical insurance policy or not. I don't know as of now. So for now, I'll keep it pending. Okay, I'll put a dot over here to identify that I've kept this pending. I will come back to this. My assessee is a senior citizen. He's a super senior citizen, in fact. In case he doesn't have any medical insurance premium, I can claim this under ATD. Okay, so I'll keep this pending for now. All right. Then the question says deposits in PPF account. Where will PPF deposit go to? Chapter 6A. So open another working note number 3, chapter 6A. Okay, and PPF will go to ATC, but where will ATC go to? ATC will go to ATCCE. So straight away write down section ATCCE. So section ATCCE, it will have 3 components, guys. ATC, ATCCC, and ATCCD subsection 1. Okay, we have PPF right now, and where will PPF go to? ATC. How much is the deposit in PPF? 55,000. Okay, then nursing home expenses relating to my assessee's profession. So come back to PGBP. We have nursing home expenses. The amount is 3,75,000. Then professional fees paid for consulting services. Relating to my assessee's profession, we have paid fees. So professional fees, how much did we pay? We paid 1,20,000. Then purchase of furniture at home. Will I give depreciation? No, we give depreciation only if the asset is used for business or profession. It is used at home. So I will not give depreciation. Personal expenses, nothing to do, balance carried forward. Then this we've already seen that even though my assessee's gross receipts do not cross 50 lakhs, he doesn't want to opt for 44 ADA. Then salary includes 60,000 paid to his sister, who's a qualified nurse, in cash. What about this? Do you remember we have subtracted salary? We subtracted salary 3,50,000. They are saying the salary includes 60,000 that we have paid to our assessee sister in cash. So which means more than 10,000 we have paid in non-specified mode. So what to do? More than 10,000 we have paid in non-specified mode. Under which section will we disallow? Under section 40A3 we will disallow. So we have subtracted the entire 3,50,000. We should have subtracted how much? Out of 3,50,000, we will not subtract this 60,000, right? Because 60,000 will be section 40A3 disallowance. So I'm going to subtract how much? I should have subtracted only the balance 2,90,000. So correct the number. Even though it is 3,50,000 salary, the salary which I am paying to my sister in cash, more than 10,000 I am paying in cash. To that extent, I will not allow. So out of 3,50,000, I will allow only the balance 2,90,000 I will allow. Why am I not allowing the 60,000? Because 48.3 says more than 10,000, any expenses, if you want allowance, you have to pay in specified mode only. Perfect understanding, everybody? Any questions? Understood this part? Okay, then entertainment expenses include 25,000 for dinner to doctors in a 5-star hotel. Dinner to doctors relating to assessee's profession, so nothing to do. We've already subtracted entertainment expenses, nothing to do. Then interest on loan for repair to property includes 40,000 for his residential property. What did we do? Interest on loan relating to repair, 65,000 we subtracted fully. But out of this 65,000, guys, 40,000 is relating to residential property. So how much is relating to my assessee's business or profession? 40,000 is relating to residential property. So I'm supposed to consider only the balance 25,000. Okay, so but then this gives me some more clarity that my assessee has a residential property. So which means I will also have which head? I will also have the IFHP head. So come to your main answer, IFHP. See, I can't start calculating IFHP right now because I don't know whether it is a let-out property, whether it is a self-occupied property. I have no idea. So I can't start calculating. But at least I will write IFHP here and I will leave so that I don't forget to calculate IFHP. These small things, if you do, silly mistakes in the examination will get eliminated. We're understanding. You're noticing I'm solving the question for you in the exact same manner in which you will read and solve in the examination. In the examination, you're going to think in the same sequence like how I'm discussing with you. If you're noticing, I'm not spending time reading the entire question and then starting to solve. Because when I do that, I'll get overwhelmed. There'll be so many adjustments. I might tend to get confused. I might tend to waste a lot of time. So I will start reading the question, and as I read the question, I'll keep doing the necessary adjustments. Yes, there are possibilities that I might have to strike off and redo 2-3 things, which is okay. I can afford to do this. Nobody's giving me marks for my perfect answer without any striking off. Nobody's giving marks for neat answers. So it is okay if I have to do these kind of striking offs. At least my answer is perfect. It is accurate and also it is fast. In tax, the biggest problem which students face is actually finishing that question paper within 3 hours. So tips like these, you notice what I did. I identified that there is IFHP, but I don't know whether it is residential, whether it is let out, whether it is self-occupied. They're just saying residential property. It may be let out also, it may be self-occupied also. So I at least wrote it here and kept so that I don't forget to do it later. Okay, then his daughter-in-law earned income of 10,000 from the amount received as gift. What about this? What about this? His daughter-in-law earned income of 10,000 from the amount received as gift. Clubbing, guys. This adjustment is relating to clubbing. My assessee has given a gift. He has transferred an asset for no consideration or inadequate consideration to his daughter-in-law. Now, if the daughter-in-law receives any income from the transferred asset in same form or different form, it will be clubbed. If my assessee gives a gift to his spouse, or if my assessee gives a gift to his son's spouse, and if they get any income out of this transferred asset, that income will be clubbed in the hands of the assessee. So here my assessee, remember, he had given a gift to his son's wife. He had given a gift to his daughter-in-law. So from that gift, if the daughter-in-law is earning any income, that income will be clubbed in the hands of the assessee. They haven't said what income is it, any residual income, which head do we put it under? We put it under IFOS. So under my IFOS head, write down, leave 2-3 lines gap and then write down clubbed income of daughter-in-law from transferred asset. From transferred asset in brackets, write down gift. So we gave a gift to our daughter-in-law. From that, she has received income. From that, she has earned income. So any income of spouse or any income of son's spouse from transferred asset is going to be clubbed in the hands of the transferor assessee. How much is it? 10,000. Then after that, fixed asset values on 1st April 2021 are as under. They have given us all these WDV numbers. So what are we supposed to do? Calculate depreciation. So under your PGBP calculation, we'll do it here itself. Depreciation. So how much is going to be the depreciation on nursing home equipments? Nursing home equipments, at what rate will you calculate? 2,20,000 into 15%. Okay, but listen, they're doing the calculation for 21-22. Don't forget that. We're doing the calculation for previous year 21-22. So the beginning of the year is 1st April 2021. Opening WDVs they have given over here. Okay, so opening WDVs 2,20,000. We will calculate depreciation at 15%. But what if it was life-saving devices, life-saving medical equipment? Here they're just saying nursing home equipment, so we'll give 15%. But what if it was life-saving medical devices? Then at what rate would you give depreciation? Then 40%. Okay, otherwise general plant and machinery 15%. So 2,20,000 into 15%, 33,000 is the depreciation on this nursing home equipment. Medical book including annual publication. What about this? Medical book including annual publication 10,000, total 35,000. At what rate do I give depreciation? At 40%. Even on annual publications, yes, annual or not doesn't matter. They're just trying to confuse us. So this was depreciation on nursing equipment. I gave depreciation at 15%. Had it been life-saving medical devices, I would have given it 40%. Then depreciation on books will always be 40%, irrespective of whether they are annual publications or not. So 35,000 into 40%, I'll get 14,000 depreciation on books. And laptop is 40,000. On laptop, I'll get depreciation at what rate? Even computers and laptops at 40%. So I'll get 16,000 depreciation here. And then he has a television purchased for nursing home purpose on 21st September is put to use on 3rd October. You remember we had calculated depreciation on television here 15%. They are saying it is put to use on 3rd October. Is it going to be 180 days? You calculate and see 3rd October will be exactly 180 days. It will be exactly 180 days, guys. So I can give depreciation for full year, and that's what I have done already. I've already calculated depreciation for the full year. It's going to be exactly 180 days. You can calculate and see. Then the question is saying he has donated 10,000 towards PM CARES Fund. Where will PM CARES Fund go? To ATG. See, under ATG, more than how much are you supposed to pay in non-cash mode? More than 2,000 you're supposed to pay in non-cash mode. Here the question doesn't say how it was donated. We'll assume it was donated in non-cash mode. Okay. So leave 3-4 lines gap and then write on section ATG in brackets, assuming donated in non-cash mode. What is the amount? 10,000. It's going to be allowed under ATG. All right, that's it with the adjustments. Now, if you remember, there are two things that are pending. One is IFHP and the other is this personal medical expenses. Okay, now, did we come across medical insurance premium anywhere? Did we come across medical insurance premium anywhere? No, which means my assessee is a senior citizen. He has medical expenses. He doesn't have medical insurance policy. So don't you think I can claim ATD for himself? I can let him claim ATD for himself, guys. Yes, I can let him claim ATD for the medical expenses that he has incurred for himself. He's a senior citizen. So I can give him ATD, but max, how much medical expenses does he have? 70,000, but maximum how much I can give him? 50,000. See guys, he is a senior citizen. He has medical expenses. He does not have a medical insurance policy. So in such cases, whatever medical expenses he has incurred, okay, we will give him a deduction under ATD. Maximum 50,000. Why 50,000? Because for a senior citizen. All right. So this is done. Then did we come across rent for debtor property anywhere? No. So obviously, what kind of a property is it then? It's obviously a self-occupied property, right? So open working note number 4, give the heading IFHP, in brackets write down self-occupied. How do I conclude it is self-occupied? Because we do not have rental income anywhere. So it's definitely not let out. So it has to be self-occupied. And how do you start calculation for a self-occupied property? You start with NAV, which is always 0, and then you subtract deductions. Deductions under which section? Deductions under section 24. How many deductions do you have for a self-occupied property? Only one deduction, which is going to be interest on borrowed capital. Now, how much interest for this residential property? 40,000. Relating to repairs. Relating to repairs, self-occupied property, maximum how much reduction can you get? Maximum only 30,000 you can get. So you will subtract only 30,000. So net loss from house property is going to be a negative 30,000. Okay, that's it with the adjustments. Go ahead, close your working notes, find your PGBP number, please. Do you get this number? 7,88,800. This is going to be a PGBP number. Come back to your main answer. PGBP 7,88,800. IFOS. We have 45,000 plus clubbed income 55,000. So total IFOS is going to be 55,000, including the clubbed income. IFHP, we have a negative number. We have a negative 30,000 number, self-occupied property. So negative 30,000. I can adjust this against IFOS also, against PGBP also. So if I add up, what's my gross total income? It's 8,13,800. Then we'll subtract chapter 6A, give reference to working note number 3. Close working note number 3. I do not have 80CCC. I do not have 80CCD1. So I just have 80C of 55,000, which is within the limit of 1,50,000. So I'll get full 55,000 deduction over here. So total deduction under chapter 6A is going to be 1,15,000. Right? So come back to your main answer. Less chapter 6A, 1,15,000. So what's the total income of our assessee now? It's going to be 6,98,800. Okay. And then they're also asking us to calculate tax liability. So write down computation of tax liability. There is no special rate income, guys. So I can straight away start calculating tax. If I calculate basic tax, what's the basic exemption limit going to be? 5 lakhs. May I see the super senior citizen, right? So up to 5 lakh, no tax. Above 5 lakh, on the excess up to 10 lakh, 20% tax. So 6,98,800 minus 5 lakhs into 20%. All right. So how much is that going to be? 39,760. I will not have 87A rebate because income is more than 5 lakhs. I will not have surcharge also because total income is within 50 lakhs. So I'll straight away have cess at the rate of 4%, which is going to be 1,590. So my total tax is going to be 41350. All right. But listen, do we have a lot of TDS credit? We've grossed up in so many places. Don't you think we can enjoy those TDS credits? Like, see, what are the places that we have grossed up? Over here, fees from other hospitals we've grossed up. Then what else have we grossed up? Even dividend income we have grossed up. So we have 2 of these gross receivables, TDS credits, TDS receivables we have. So we can claim that as credit, right? So write down less TDS credit relating to hospital fees. What's the income? The income from the hospital is 6,50,000. So 10%. And 194J, remember we discussed. So 6,50,000 into 10%, 65,000 was deducted at the hospitals. Then dividends. Dividend also we've grossed up. Amount is 21,000. Under section 193, they would have deducted tax at 10%. So 2,100. So what's the net number now? The net number is a negative number, negative 25,750. So what do you call this negative number? Income tax refund, right? You can claim refund of 25,750. Any questions? Start sending them in the chat box. See, there was one question somebody had asked, I'm forgetting, about 43B. I will not talk about 43B. I will talk about 43B only if the interest is on loan, which I have borrowed from a bank or from a financial institution or from State Finance Corporation or from SIIC or from NBFC. Here the question just says interest on loan. It doesn't say from to whom we have paid this interest. It doesn't say from whom we have borrowed the loan. So I will not talk about 43B. Okay, then there is one more question. 1,50,000 restricted to 1,15,000. When did we restrict it to 1,15,000? We didn't restrict it. That's how much it was. We did not restrict any chapter 6A. Total chapter 6A was 1,15,000 only. All right, guys. Yes, so that is it with this question. Now, let me quickly run through the learnings that we have had through this question. Our very first learning, the most important learning, by the way, we have to still finish 44 ADA. Keep that in mind, okay? Our first learning was about grossing up. Before grossing up, we always check whether, first of all, tax would have been deducted or not. We check about that and only then we gross up. So that was our first and our biggest learning through this question. Then we also had a learning in the form of 28(4). Any gifts which I received relating to my business or profession, I tax them under PGBP under section 28(4). Okay, then over here, all of this was pretty normal. Here we did not have any major learning. Then a dividend we grossed up. We very rarely come across dividend grossing up. Dividend has to be grossed up applying section 194. Under 194 at 10%, they would have deducted tax at source. Then honorarium, we did not gross this up because it was within the limit of 30,000. That's why I told you, whenever you have, grossing up adjustments, never gross up blindly. First check that is TDS even applicable, only then gross up. Okay, then after that we had a good adjustment regarding ATD over here. They did not clearly give us information, so we had to work around it. We had to make assumptions. We had to assume that there is no medical insurance policy because there was no medical insurance premium given in the question. So medical expenses, super senior citizen, we took ATD deduction, and then we had to assume that the house property is self-occupied because there was no rental income given. Understood? Yes. Are you guys feeling any better after this question? I'm very sure there must have been a lot of learning through this question. Yes. Then Nihal is asking us a question which I want you guys to try answer. It's a very basic question that he's asking us. His question is 50,000 exemption applicable to gift received in PGBP also or not? What do you guys think? Of course, you can answer this. Very good, guys. Perfect answer. 50,000 exemption is only in IFOs, right? 50,000 exemption we do not have in PGBP. All right. So that is it about this question, guys. Can we straight away go to the next question now? Yes. Come on, let's go to the third question. The third question that I've brought in for you over here. The reason why I have... Okay, wait. Thank you for reminding me, Hari Kishan. We have to finish 44 ADA also in this question, right? Let's come back to that. Let's come back to our main answer. Write down computation of total income. In brackets, write down applying section 44 ADA. So if I apply 44 ADA, what will the PGBP of my assessee be? First of all, 44 ADA is applicable because my assessee's gross receipts do not exceed 50 lakhs. So my assessee's PGBP will be 50% of gross receipts. Now, can you tell me what are the gross receipts? 50% of what number? Perfect. 50% of 18,05,000. Don't you think this becomes a gross receipt, guys? It will include the total receipt from my assessee's profession, fees from other hospitals, fees of March 2021, current year fees, and 28 for gifts. So we will consider the gross receipts. How much receipt does my assessee have from his profession? So total receipt from the profession is 18,05,000. So this 18,05,000 into 50%, and that is going to be 9,02,500. You're noticing there are specific reasons why I've chosen this question to discuss with you, not just because this is a preceding examination question paper question. Otherwise, see, if we hadn't discussed this, I'm very sure many of you would have made the mistake of not taking this 45,000. Many of us wouldn't have taken the 28 for gift, right? Yes, agreed. So you are supposed to consider this also. You're supposed to consider all the receipts from profession. Even this becomes a receipt from the profession. So gross receipts from the profession, 50% of that, 9,02,500. Other incomes will stay the same. My IFOS will still be 50,000, and my IFHP will still be a negative of 55. 1 minute. IFOS will still be 55,000, and my IFHP will still be a loss of 30,000, loss from house property. So at this stage, what would my total income be? My gross total income. That would be 9,27,500. From this, I would have enjoyed Chapter 6A. Chapter 6A also will not change. It's going to be 1,15,000. So my net income, my total income would be 8,12,500. And what would the tax be on this? They're also asking us tax, guys. They're asking us what will be total income and tax payable if he opts for 44 ADA. So write down computation of tax liability. Same thing, up to 5 lakh, his income is going to be not taxable because he's a super senior citizen. So his basic tax is going to be 20% of his income in excess of 5 lakhs. That's going to be 62,500. So I will not have 87A rebate, no surcharge. Straight away, I'll add cess at 4%, which is going to be 2,500. So his total tax will be 65,000. But here again, I will claim TDS credit. Remember, we had two TDS credits, 65,000 and 2,100. The same two TDS credits I will claim. So the net number will be 2,100. He can enjoy an income tax refund of 2,100. All right. So which of the two is beneficial for the assessee? What do you think? They are also asking us, will it be more beneficial for him to adopt 44 ADA? See, if he doesn't choose 44 ADA, his refund will be 25,750. If he chooses 44 ADA, his refund will be only 2,100. So you will obviously prefer more income tax refund. So you will suggest to the assessee that do not follow 44 ADA, because if you do not follow 44 ADA, you will get a more income tax refund. But if you don't follow 44 ADA, then you'll have to get your books of accounts audited and you'll have to mandatorily maintain books of accounts. So let's write our final conclusion. Write down, assessee is advised not to opt for section 44 ADA. Assessee is advised not to opt for section 44 ADA as that will result in a higher income tax refund. But in that case, he shall maintain books of accounts mandatorily under section 44AA and get them audited under section 44AB. Are you guys done with this? Okay, so that is it about our discussion regarding this question. Now listen, I am taking you forward to the third question. The reason why I have picked the third question is I wanted to discuss with you at least one question with 115 DSC and AMT. Okay, so AMT we will be seeing in the fourth question, 115 BAC we will cover in the third question. Before I start the third question, let me give you one quick revision of 115 BAC. Listen to me. 115 BAC is first of all applicable to which assessees, guys? It is applicable only to individuals and HUFs. Now here it doesn't matter whether you're a senior citizen, whether you're a super senior citizen or not, it doesn't matter. You will have one normal slab rate only. Up to 2,50,000, it's going to be exempt for you. That basic exemption limit will not change. If you're a senior citizen, super senior citizen, it will not change. And 115 BAC will not apply to your special rate incomes. Even under 115 BAC, your STCG 111A will still be taxed at 15%. Your 112 LTCG will be taxed at 20%. Your 112A LTCG will be taxed at 10%. The lottery incomes will still be taxed at the special rate incomes only. Only your other normal rate incomes will come under 115 BAC. Under 115 BAC, your basic exemption limit will always be 2,50,000 only. It will not change even if you're a senior citizen, even if you're a super senior citizen. Now, under 115 BAC, as you are in here, you'll have to give up some benefits. What are the benefits that you will have to give up? We will go one by one. Under the salaries head, what are the benefits that you have to give up? First of all, leave travel concession exemption you will not get anymore. Then HRA exemption you will not get anymore. In fact, allowances, children education allowance, children hostel allowance, none of those allowances you will be able to enjoy as exemption anymore, but you will still get exemption for transport allowance. You will still get exemption for travel allowance. You will still get exemption for conveyance allowance and daily allowance. These allowances you will still enjoy the exemption even under 115 BAC, but other allowances you will not enjoy any exemptions. Then number 4, section 16 deductions also you will not get if you follow 115 BAC. So this is it about the salaries head. Then talking about the IFHP head. Under IFHP head, you can take interest deduction for let out property, but you cannot take interest deduction for self-occupied property. Self-occupied property, no interest deduction at all. All right, are you understanding? Salaries head I've discussed with you. I have discussed with you about IFHP head. Under IFHP, you will get deduction only for interest that you pay on let out property. You will not get interest for you will not get deduction for interest that you pay for self-occupied property. Then talking about PGBP, here you will not get additional depreciation benefit, the 20% additional depreciation benefit that you generally get. Then section 35 deduction that you get relating to contribution to outsiders, that you will not get anymore, which means in-house scientific research you will still enjoy the deduction, but contribution to outsiders alone, section 35 deduction you will not allow, you will not enjoy anymore. Even 35 AD specified businesses deduction you will not enjoy anymore if you choose section 115 BAC. Then talking about your next head, capital gains, there is going to be no change at all. Under IFOS, family pension, you will not get the deduction. Generally, family pension, you get the deduction at 15,000 or 33.33% of the pension received, whichever is lesser, you get as a deduction. So that family pension deduction, you will not get anymore. Okay, then forget about the entire chapter 6A, no chapter 6A at all. In the entire chapter 6A, only 2 sections you will still get. You will still get ATCCD subsection 2. You will still get ATJJAA. Apart from these 2 sections, any other section under chapter 6A you cannot enjoy under 115 BAC. Then under set off chapter, set off and carry forward chapter, under this chapter you cannot allow interhead adjustment of loss from house property. See, intra-head adjustment you can still do, but you cannot adjust loss from house property against PGBP or loss from house property against salaries. Interhead adjustments I will not allow. Interhead adjustments of loss from house property I will not allow under if you choose 115 BAC. Okay, then lastly, some more points, some other points, like when you club a minor child's income, you get section 1032 exemption of 1,500 per child, right? That exemption you will not get. Then section 10 AA, SEZ unit tax holiday, you will not get under 115 BAC. Also, lastly, generally daily allowance of your MPs and MLAs is generally exempt. Daily allowance, constituency allowance is generally exempt. So the daily allowance, constituency allowance of MPs and MLA, that exemption you will not get anymore, which means it's going to be taxable under 115 BAC. So these are the benefits that you have to give up under 115 BAC. I just quickly run through the entire section for you. It is applicable only to individuals and HUFs. Special rate incomes will still be taxed at special rate. Basic exemption limit will always remain 2,50,000 here. You cannot enjoy these benefits. Under salaries, you'll have to forego 4 benefits: leave, travel, concession, HRA, all allowances except transport, travel, conveyance and daily, and section 16 deductions. Under IFHB, network property, no change. Self-occupied property, you cannot enjoy the interest deduction. Under PGBP, you cannot enjoy additional depreciation. You cannot enjoy section 35 for contribution to outsiders. You can still enjoy for in-house scientific research, but contribution to outsiders you cannot enjoy. 35 AD specified businesses also you cannot enjoy. IFOS, family pension, you cannot enjoy any deduction. Under chapter 6A, you will not get any deduction except ATCCD2 and ATJJA. Set off, only one change: interhead adjustment of loss from house property alone I will not allow. And apart from that, 1032 exemption of 1,500 per child. Are you able to relate to this point? Minor child clubbing, guys, minor child clubbing, you take 1,500 exemption per child, right? That exemption you will not get. 10 AA tax holiday you will not get. Daily allowance, constituency allowance of MPs and MLAs is generally exempt. That exemption you will not get. Okay, so these are the points that I want you to remember. And one more thing, guys, if you choose 115 BAC, then even AMT will not apply for you. See, 87A rebate you can still take. Surcharge will still apply. All right, SEZ will still apply. Everything else will still apply, but AMT will not apply if you choose 115 BAC. Crystal clear with this? Can I start working out the question for you now? Okay, I'm taking up question number 3. All right, let's read the question and then we'll work it out. What does it say? Mr. Arun is working as a senior manager in ABCD Bank, a listed commercial bank in Delhi since Jan 2005. He gives the following details of his income for the previous year 2021. So the question in our question is previous year 2021. That is, we're talking about assessment year 21-22. Okay, they've given us a lot of information. What are they asking us? Compute Mr. Arun's total income and tax liability in a manner most beneficial to him. Manner most beneficial to him indicates what? We have to consider the normal route. We have to consider 115 BAC, and we will pick whichever is the least of them both. Okay, so let us talk about the normal route first. So write down answer to question number 3. Computation of total income In brackets, write down normal route, previous year 2021, assessment year 21-22. Make a 3-columnar table, particulars, working note, amount. Okay, we will start with the adjustments. First 2 questions had PGBP. This third question has salaries. Okay, so first of all, we're going to do normal usual calculation, guys, under the normal route. So for some time at least, you can keep 115 DAC aside. All right, so we will look at the adjustments. We will start working them out one by one. They've given us HRA salary and all, which means my SSC will have salaries head. Under particulars, write down salary. Easily leave 20 to 25 lines gap because we have to do 115 BAC, give conclusions and all. So straight away start off with working note number 1 with the heading salary. Guys, I'm repeating again, I am not applying 115 BAC initially. All right, so we're doing it in the normal route first. So first of all, my SSC has house rent allowance. So under salary, house rent allowance, HRA, 15,000 per month. So we don't know whether he has paid rent or not. Only if he pays rent, I will give him exemption. So for now, I'll keep this pending. I'll come to this. Basic salary 20,000 per month, fully taxable, guys. So basic salary, write down. Just a moment. Yeah, so basic salary 20,000 per month. 20,000 into 12, show the calculation. That's going to be 2,40,000. Then dearness allowance is 5,000 per month. DA 5,000 into 12, 60,000. 50% forms part. Okay. Then the bank, which bank? Mr. Arun is working as a senior manager in ABCD Bank. So the bank is his employer. So the employer has paid 5,000 per annum as premium on personal accident insurance policy taken for Mr. Arun. Tell me, personal accident insurance policy premium exempt or taxable? Employer is paying premium for the employee. See, health insurance premium, personal accident insurance policy premium and all fully exempt. Which premium will be taxable for the employee? Life insurance premium. If the employer has paid life insurance premium for the employee, that will be taxable for the employee. Any other insurance premium is going to be fully exempt. All right. So employees, personal accident insurance premium, it's paid by the employer. It's definitely a benefit for the employee, but it's going to be exempt. Only life insurance premium, you would have said, is taxable. Then the bank also allotted 2,000 sweat equity shares to Mr. Arun in May 2020 at the rate of 1,300 per share. FMV of the share was 1,500 on the date of exercise of option. What about this, guys? We have sweat equity shares. So how much will be taxable? We will see what is the FMV on the date of exercise of option, 1,500 per share. From that, we will subtract the exercise price. How much has he paid for the shares? He has paid 1,300 per share. So this is going to be taxable. Totally how many shares? Totally 2,000 shares. So so we'll see FMV on the date of exercise of option minus exercise price per share. This difference is going to be taxable in the year of allotment. The shares were allotted in the current year itself. So we will tax it in the current year. So how much is going to be? It's going to be 200 rupees into 2,000. 4 lakh rupees is going to be taxable relating to sweat equity shares. Crystal clear how we did this? You will find the difference between what's the exercise, what's a FMV on the date of exercise of option and what's the exercise price. So FMV is 1,500. I am paying 1,300 per share. This difference I will get this difference I will tax it. The difference between 1,500 and 1,300. This difference I will tax in the year of allotment. Then the question says he sold all the shares for 2,100 on 31st March 2021 on a recognized stock exchange. Assume STT has been paid. Guys, he sold the shares. So which head will be attracted now? Capital gains. So under particulars, write down capital gains. salary was working note number 1, capital gains working note number 2, open working note number 2. How do you start capital gains working note? You always start with checking what is the capital asset. So what is a capital asset in this question? The capital asset over here is shares. What kind of shares? Sweat equity shares. Give me some more clarity. What kind of sweat equity shares? STT has been paid. So what kind of sweat equity shares? I can call them as listed sweat equity shares, guys, because STT is paid. So what's the period of holding? See, when did we get the shares? We got the shares in May 2020. And when are we selling away the shares? On 31st March 2021. This period is definitely less than 12, 24, 36. It's definitely less than 12 months. Listed sweat equity shares, guys, listed equity shares, relevant period of holding is 12 months. It's less than 12 months. Therefore, clearly this is going to be a short-term capital asset and it will be taxable under section 111A. Why 111A? 111A because short-term capital asset, listed equity shares, STT paid at the time of transfer. So I can talk about section 111A. Now I'll start my computation. What's a full value consideration? We sold the shares for 2,100 per share. Total 2,000 shares. So 2,000 shares into 2,100 per share. So what is my total selling price? Total full value consideration? I'll get 42 lakhs. From this, we will subtract expenses on transfer. We don't have any expenses on transfer. So this 42 lakhs also becomes our net consideration. Can I index my cost of acquisition? A big fat no, it is a short-term capital asset. I'll straight away subtract cost of acquisition, 2,000 shares. Now you tell me what will the cost of acquisition be? How much should I consider as cost of acquisition? My assessee actually paid 1,300 per share. Will I consider that? No, you will always take FMV. FMV on the date of exercise of option 1,500. Are you understanding, guys? The cost of acquisition of sweat equity shares will not be whatever you actually paid. Whatever is the FMV on the date of exercise of option. See, whatever is the FMV on the date of exercise of option, you will consider that in salaries head also. You will consider that under capital gains also. So under capital gains, you will ignore the actual cost of acquisition. Instead, you will take the FMV on the date of exercise of option. All right. So FMV on the date of exercise of option is 1,500. This is FMV on the date of exercise of option. I will ignore the actual cost price of 1,300 per share. Instead, we will take the FMV on the date of exercise of option. This will become our cost of acquisition. So 2,000 into 1,500 is going to be 30 lakhs. No, you don't see which is higher and all. You're supposed to take the FMV number only. Why are you taking the FMV number? Understand the logic. You've already considered the FMV number over here. You've already taxed it over here. It is as if this number is already taxed over here, right? You've already considered 1,500 over here. So the same 1,500 number over here, which you have taxed it earlier, you will now consider it as your cost. You've already taxed 1,500 earlier. So now the same 1,500 number you will consider as your cost. So cost of acquisition will be 1,500, the FMV on the date of exercise of option. We don't have any cost of improvement. So what's my net number now? 12 lakhs. This is going to be my STCG under section 111A. 111A STCG will be taxed at what rate? At 15%. Very good. Then he transferred 50,000 per month as rent to the bank account of his mother, Mrs. Nirmal, who owned the house, municipal value 2 lakhs, in which he stayed at Delhi. So guys, he is having rental expense. He is paying 50,000 per month rent to his mother. So which means I can consider HRA now. Yes. So HRA, how do you calculate? I'll do the calculation roughly over here. HRA, you start with what's happening. How do you start HRA? Always you consider salary for the purpose of HRA first. How many components of salary? 3 components. What are the 3 components? Basic salary, DA forming part, and employees turnover based commission. What is the basic salary? 2,40,000. DA is 60,000. The question says 50% forming part. So you will consider only 30,000. There's no commission. So 2,70,000 becomes a salary for the purpose of HRA. Then after that, you calculate exempt HRA. How do you calculate exempt HRA? How many things do you calculate? 3 things. Number 1, 50% of salary or 40% of salary depends upon whether he's living in a metro or non-metro. Where is he living? He's staying in Delhi, which is a metro. So you'll consider 50% of salary. So what is 50% of 2,70,000? 1,35,000. Then what else will you consider? Actual HRA. HRA, he received 15,000 per month. So 15,000 into 12, 1,80,000. And number 3, rent paid minus 10% of salary. How much rent is he paying? 50,000 per month. So 50,000 into 12 minus 10% of salary minus 27,000. So 50,000 into 12 minus 10% of salary, that's going to be 5,73,000. Now out of these numbers, you're supposed to pick whichever is least. Which is least? 1,35,000. So can I put 1,35,000 over here? No, this is only exempt HRA. What do we have to calculate now? Taxable HRA. What will be taxable? Received minus exempt, the balance is going to be taxable. I received 1,80,000, guys, out of which 1,35,000 was exempt. So how much will be taxable? The balance 45,000 is going to be taxable. So HRA 45,000. Perfect understanding. So this is it about my HRA discussion. My assessee is paying rent to his mother. Will that matter to us? No, it will not matter at all. It's normal, usual calculation. Doesn't matter. Then he also owns a house property at Kanpur whose municipal value is 2,60,000, fair rent is 2,20,000, standard rent is 2,40,000. Property is let out for a rent of 22,000 per month throughout the year. He also paid municipal taxes at 10% of the municipal value of the house at Kanpur during the previous year. A very simple adjustment relating to which head? Very simple adjustment relating to IFHP head. So come back to your main answer. You will have IFHP. Give reference to working note number 3. After your second working note, open another working note with the heading IFHP. Okay, what kind of a property is it? It's clearly a let out property, right? Let out property, you start with GAV. Under GAV, what's our first step? Municipal value of fair rent, whichever is higher. So what's our municipal value? 2,60,000. And what's our fair rent number? 2,20,000. So out of these two numbers, you're supposed to pick whichever is higher. So which is higher? 2,60,000. Then what is our step 2? The step 1 number, that is 2,60,000, or a standard rent number. What's a standard rent number? Standard rent is 2,40,000. Out of these two numbers, you pick whichever is lower. Which is lower? 2,40,000. Then step 3 is actual rent minus unrealized rent. What's the actual rent? 22,000 per month. So 22,000 into 12, that's going to be 2,64,000. The question doesn't talk about any unrealized rent and all. So actual rent minus unrealized rent will be 2,64,000 only. Then after that, step 4 is going to be a step 2 number, which is 2,40,000, or a step 3 number, which is 2,64,000. Out of these two numbers, we pick whichever is higher, which is 2,64,000. Then step 5, vacancy loss. The question doesn't talk about any vacancy. So step 6, what's our GAV number now? Step 4 minus step 5, that is going to be 2,64,000. Okay, so this is going to be our GAV number. GAV is 2,64,000. This was pretty simple. Then from this, what do we subtract? Let out property, guys. Municipal taxes paid. We'll consider only how much ever municipal tax you've actually paid. The question says he also paid municipal taxes at 10% of municipal value. What's the municipal value? 2,60,000. So municipal tax actually paid is 26,000. So guys, what is our net annual value now? Our net annual value is going to be 2,38,000. Okay, then from this we will subtract deductions under section 24. How many deductions will we have? 2 deductions. Number 1, we will have standard deduction of 30%. So 2,38,000 into 30%, that's going to be 71,400. And one more deduction will be interest on borrowed capital. Do we have any interest? We read till here, any interest we came across. Till here, we did not come across any interest. There might be something here we don't know, so we'll keep it pending. Okay, then he has a son, Aditya, aged 12 years, which means he has a minor son who is earning interest of 50,000 on FD created by his late grandfather in his name. So, minor child is earning interest income. Tell me, is a minor child disabled? No. Is the interest income coming from his manual work, skill, talent, labor, and all? No. So can I club this? Yes, I can club it, right? So the question says he's earning interest of 50,000 per annum. Then gross interest credited by the bank during the year is 43,750. Now this is confusing me. How much interest should I take? Read this adjustment once again. He has a son Aditya, aged 12 years, having PAN, who is earning interest of 50,000 per annum on FD created by his late grandfather in his name. Gross interest credited by the bank during the year is 43,750. So should I take the 50,000 number or should I take the 43,750 number? I should take 43,750 because what is the actual interest for the year? It says 50,000 per annum, but what's the interest credited during the year? Gross interest, which means we don't even have to net it off. The gross interest is 43,750. So we will tax 43,750. Under which head? We will put it under the IFOS head, right? So come back to your main answer. Write down IFOS. Give reference to working note number 4. Open working note number 4, IFOS. So IFOS, what kind of interest is it? It is going to be FD interest. So FD interest, write down. How much is the FD interest we are considering? 43,750. But what is that one exemption which I should remember to give? 1,500 section 1032 exemption, guys. Minor child's income, I am clubbing with parents' income. So I'll give 1,500 per child exemption, right? So 43,750 minus 1,500, 42,250 exemption I will be giving over here. All right, 42,250 is going to be taxable. Then what else? He received the following gifts from his friends and relatives. Gold chain from a friend worth 70,000. What to do with this? It's movable asset from taxable. So write down under IFOS, gold chain. What is the amount? What's the value? 70,000. This is going to be taxable. Then LED TV set from colleagues on completing 15 years in a bank. It is from colleagues. So tell me, will it come under the salary head or will it come under the IFOS head first of all? Obviously, it will come under the IFOS head. When do you put it under the salaries head? Only if it is from the employer. This is not from the employer. This is from colleagues. So this will come under the IFOS head. But tell me, TV set. Can I put it as movable asset? Can I call it movable asset? No, I cannot call it as movable asset because this is going to become a personal effect. Movable asset, which is used for personal purposes. It will become a personal effect. So I cannot call it as capital asset. I cannot call it as movable property. It cannot be taxed under IFOS. No doubt the value is more than 50,000. Are you understanding? It's a personal effect. It is not a capital asset. So LED TV set, I will not consider because it is a personal effect. It is not a capital asset. All right. Then 51,000 in cash from married sister of wife. See, is this relative? Relative will include, if I am the assessee, my brother, my sister, my lineal ascendants, my lineal descendants, the brothers and sisters of my parents. Then it will also include my spouse's brother, sister, lineal ascendants and lineal descendants, and spouse of all these people. This is the meaning of relative for the purpose of gift. Here we're getting the gift from whom? From married sister of wife, which means wife's sister. Wife's sister is considered as relative? Yes. So wife's sister will be considered as relative. Any gift from a relative is going to be fully exempt. So gift from wife's sister is going to be exempt because it becomes a relative. So that's it with all my adjustments. Now go ahead, close the working notes one by one. What is our gross salary? Add up. Our gross salary is going to be 7,45,000. From this, I'll subtract deductions under section 16. How many deductions will I have? Only one over here, standard deduction of 50,000. So if I enjoy this standard deduction of 50,000, my net taxable salary is going to be 6,95,000. So come to your main answer, taxable salary 6,95,000. Okay, then coming to the capital gains we've already calculated. My 111A STCG. This capital gains is nothing but STCG under section 111A. How much is it? It is rupees 12 lakhs. Then IFHP, we do not have any interest number, guys. We've gone through the entire question. So what is our net IFHP number now? It is 1,66,600. This is our net IFHP number, right? So go back to your main answer, IFHP, fill in 1,66,600. And finally, what's our total IFOS? 42,250 plus 70,000, 1,12,250. This becomes a total IFOS. Fill this number also in your main answer, 1,12,250. They are asking us to find total income and tax liability. So what is my assessee's GTI? Assessee's GTI is going to be 21,73,850. We did the entire question. We did not have any chapter 6A. So the same number is our total income also. Now on this number, if I ask you to calculate tax liability, computation of tax, it's going to be very simple. See, my assessee has a special rate income of 111A. So this will be taxed at 15%, right? So listen, how do you calculate tax? My basic exemption limit is going to be 2,50,000 only because assessee is not a senior citizen. My assessee's total income is 21,73,850. I'll split this into two parts. What is the STCG under section 111A? That is 12 lakhs. I'll handle this separately. And my normal rate income, what's my balance normal rate income? 9,73,850. I'll handle this separately. See, the basic exemption limit, I'm supposed to adjust against what first? I'm always supposed to adjust it against the normal rate income first. So normal rate income up to 2,50,000, no tax. 2,50,000 to 5 lakhs, I anyways have to pay 5% tax. So up to 5 lakhs, I anyways have to pay 12,500 tax plus 20% of my income in excess of 5 lakhs. This is going to be the basic tax on this normal rate income, guys. Are you understanding what exactly I did over here? I'm going to adjust this basic exemption limit against normal rate income first, right? So my normal rate income is 9,73,850. Up to 2,50,000 no tax. 2,50,000 to 5 lakh, I anyways have to pay 5% tax, which is going to be 12,500 plus 20% of my income above 5 lakh up to 10 lakhs. So that's going to be how much? That's going to be 1,07,270. And how will you calculate tax on this 111A STCG? At what rate? Perfect. At the rate of 15%. So 12 lakh into 15%, that's going to be 1,80,000. So guys, what's the total basic tax now? Total basic tax is 2,87,270. I'll straight away add cess at 4%, no rebate, no surcharge. So after adding cess, it's going to be 2,98,760. All right. Now I'm still under the normal route only. Will I have AMT? I will not have AMT because I don't have chapter 6A part C. I don't have 10 AA. I don't have 35 AD. So I don't have to think about AMT. So this is it with my normal tax calculation. Till here, are we crystal clear? Yes. Now see, what are the learnings that we have had? Salaries were simple, I think. HRA must have been a good revision for you. Personal accident insurance premium. For some of you, it must have been a new learning that only life insurance premium paid by employer is taxable. Other premiums paid by employer like health insurance premium, personal accident insurance premium and all is exempt. Sweat equity shares also must have been a good learning for many of you. FMB on the date of exercise of option minus exercise price is going to be taxable. Capital gains was straightforward. In capital gains, the only learning I would say is that when you're calculating cost of acquisition, all right, you're supposed to take the FMB on the date of exercise of option as your cost of acquisition and not the exercise price, not how much ever you actually paid. You're supposed to take FMB on the date of exercise of option instead. Then let out property was a very, very straightforward adjustment over here. All right, and IFOS here we saw clubbing adjustment. We clubbed the minor child's FD interest. Guys, there's FD interest, so shouldn't we have taken chapter 6A? No, FD interest goes only to section 80TTB, right? And 80TTB is only for senior citizens. My assessee over here is not a senior citizen. The question doesn't say he's a senior citizen, so I cannot claim 80TTB. Does FD interest go to 80TTA? 80TTA is only savings bank interest. All right, so that is it with this normal route calculation. We did not have any major discussion under the tax calculation. Tax calculation was very simple. 111A STCG, I tax at 15%. Okay, now guys, they're asking us to calculate tax and all in the manner which is most beneficial to the assessee, which means I will now consider section 115 BAC. But before I do that, let me handle the questions in the chat box. Yogendra is asking me about the LED TV adjustment. See, listen, no doubt I am getting a TV set from colleagues. FMV is more than 50,000, but TV set, this is going to be a personal effect. Why is it a personal effect? Because it is movable and I use it for my personal purposes. And personal effects are not capital asset. If it is not a capital asset, I cannot tax it under IFOS. Understood, Yogendra? Yes, it is not a capital asset. Hence, I can't call it property under IFOS. I can't tax it under IFOS. Then another student is asking, why am I not taking 80TTA? Because 80TTA covers only savings bank interest. It does not cover FD interest. 80TTB covers both. It covers savings bank interest. It also covers FD interest. But 80TTB is only for senior citizens and super senior citizens. 80TTA is for all other individuals. All other individuals and HUF 80TTA. 80TTB is only for senior citizens and super senior citizens. Did you understand that? Yes, so I cannot take 80TTB. 80TTB only covers FD interest. 80TTA does not cover FD interest. 80TTA covers only savings bank interest. And why did I not choose 80TTB? Because assessee is not a senior citizen, not a super senior citizen. All right, then there is another question from in the chat box. If gift received is laptop, will it be exempt or taxable? Laptop, again, if you're going to use a laptop for your business or profession, then I can call it as a capital asset because it is not used for personal purposes. Understanding, if laptop is being used at office, if somebody is giving you a gift of laptop, and if you're going to use the laptop for your office purposes, then it is not personal effect. You can call it as property and you can tax it. But if you're going to use the laptop at home for your personal purposes, then you cannot call it as property. You will not tax it. Understanding, it depends upon what assumption you make. You can assume accordingly. All right, fine. So then there's one more question. Insurance part. Insurance part I repeated several times already. I'll give you one more repetition if you want. If the employer is paying my life insurance premium, it's going to be taxable for me. If the employer is paying any other premium for me, for example, if he's paying my health insurance premium, or if he's paying my personal accident insurance policy premium, all other premiums he's paying for me will be exempt. Only life insurance premium, if he's paying for me, it's going to be taxable. Okay, see, listen, I don't understand why you guys are getting so confused about the personal effects part. Listen to me. Any asset which is movable and which is used for personal purposes, what do you call that asset? A personal effect. If it is a personal effect under IFOS, it will not be taxable. Okay, you're getting a gift. Okay, you're getting a gift of an asset which is movable and which is used for personal purposes. Then you will call it as personal effect. If you call it as personal effect under IFOS, that gift will not be taxable. Now, in this question, it was a TV. A TV is going to be movable and it is going to be used at home, personal purposes. Therefore, it is a personal effect and therefore under IFOS, it is not taxable. If on the other hand, if it was a laptop, then yes, it is movable. But is it used for personal purposes or not? You will have to make an assumption. If you say that yes, I'm going to use it at home, then it becomes a personal purpose, personal effect. Under IFOS, it will not be taxable. But if you say that no, I'm going to use it for my business or I'm going to use it for my profession, then it is not being used for personal purposes. So then it will not be a personal effect. And then in that case, under IFOS, it will be taxable. Now is all the confusion clear? Haripriya, Meenakshi, Abhishek. Yes, I think we've spent enough time on this. Abhishek, could you please give me a response, please? No, Haripriya, I think that would be unfair. Now listen. So with this, I think I am closing our discussion on the normal route. And now I am starting off with section 115 BAC. Okay, I'm going to compute the total income of my assessee if my assessee is going to follow 115 BAC. So computation of total income applying section 115 BAC. But why am I suddenly applying 115 BAC? Did you understand that also? I am applying 115 BAC over here because the question says find the tax liability in the manner most beneficial to him, which indicates I'm supposed to compare with 115 BAC and pick the least taxable number. So under 115 BAC, see, I'm not going to do the entire recalculation again. I don't have to waste my time in the examination doing that. I'll just make some additions and some subtractions. See, what are the numbers that will change? First of all, HRA, you will not get the exemption anymore. HRA will be fully taxable. Under salary, anything else to be changed? Very good. I will not get the standard deduction anymore. Any other change in salary? That's it. Then under capital gains, no change because of 115 BAC. IFHP, it's a lettered property, guys. IFHP, the change is only for self-occupied property. Lettered property, there is no change. IFOS, any change? One change is there. 1032, 1500 exemption, you will not get. Right. So what I'll do is, I'll see what is my total income as per the normal route. What's my total income in the normal route? 21 lakh 73,850. So this itself I'll add and subtract and I'll make changes. First of all, I'll add back HRA exemption. In 115 BAC, I will not give you HRA exemption. HRA, how much exemption you have enjoyed? 1,35,000 exemption you have enjoyed. So I'll add back the HRA exemption. No HRA exemption in 115 BAC. Then I'll add back section 16 deduction, standard deduction 50,000 you have enjoyed already. So I'll add back that also. You're understanding. And then what else am I supposed to add back? Section 1032, the minor child exemption of 1,500 which you have taken. I'll add that also. That's it. So what's my total income for the purpose of 115 BAC, guys? Total income for 115 BAC is going to be 23,60,350. 23,60,350. Now, did you understand what I did this, how I did this, and how I got this number? I am just seeing what are the benefits that I have to reverse. I am just reversing those benefits. HRA exemption you cannot get in 115 BAC. Section 16 deduction you can't get under 115 BAC. 1032, the 1,500 exemption for minor child's income you can't get under 115 BAC. So I reversed these benefits. So my revised income for 115 BAC is 23,60,350. Now answer my question. On this I have to calculate tax liability. How do I calculate tax liability under 115 BAC? On the first 2,50,000, how much? 0. Basic exemption limit 2,50,000. Guys, wait. By the way, I hope you remember this 23,60,350 includes STCG of how much? It includes STCG of 12 lakhs. On that 12 lakhs, I will still tax at what rate? On that 12 lakhs, I will still tax it at 15%. That will not change. Do you remember that discussion? Yes, I had told you all other incomes you can put under 115 BAC, but special rate income will be still taxed at special rate only. So for section 150, for section 111A STCG, that 12 lakhs will still be taxed at 15% only, that is 1,80,000. So what's my balance income? 23,60,350 minus 12 lakhs. What's my balance income? 11,60,350. On this only, I have to find tax liability. Okay, now how will I find? Up to 2,50,000, no tax. 2,50,000 to 5 lakhs. On this 2,50,000, you will pay at what rate? At 5%, 12,500. 5 lakh to 7,50,000. On this 2,50,000, you will pay at 10%. That's going to be 25,000. 7,50,000 to 10 lakh. On this 2,50,000, you will pay at 15%. That's going to be how much? 37,500. Then 10 lakh to 11,60,350, my balance income. What is my balance income? 1,60,350. On this, you will pay at 20%. How much will that be? 32,070. So what is my total basic tax on my balance income? On the STCG part, I will still tax at 15% on my 111A STCG. On this, I will still tax at 15%. Balance income, I am calculating as per 115 BAC. So what's my total tax here? It's going to be 1,07,070. So what's the total basic tax now? 2,87,070. Okay, no rebate, no surcharge. I'll straight away add cess at 4%. So after I add cess, it's going to be 2,98,553. Okay, so which is more beneficial, guys? With 115 BAC or without 115 BAC? There's a small difference. Without 115 BAC, 2,98,760. With 115 BAC, 2,98,553, which I will round off. I'll round off to how much? 2,98,550. So which of the two is beneficial? Obviously, with 115 BAC, it is beneficial. Understanding, with 115 BAC, it is beneficial. All right. Now from this, if you want, you can also subtract the see, wait, somebody is asking me a question. Karthik is asking TDS on FD interest. No, I will not consider any TDS because you're asking me gross tax liability. Gross tax liability indicates what? Without considering TDS credit. Right? So I'm not going to consider TDS credits. All right. So did we all understand this question? 115 BAC part, did you follow? Yes. Any questions? $115 BAC part, if you see, I first calculated my total income. I just reversed some benefits, all right? And then tax liability on my special rate income, I will still calculate at 15% only. Only on the balance income, I will use 115 BAC calculations. All right. So my total tax is slightly lesser with 115 BAC. So this is what I will suggest to the assessee. All right. So with this, we'll close this question. And now shall we go to one last question? Question number 4. Question number 5, we will not do it. I don't think we have the time to do it. We will pick question number 4. But question number 4, I want to give you guys some understanding on AMT. So that is why I want to pick question number 4 and do this. All right. So let me first give you one small revision on AMT, and then I will start working out the question for you. Okay. See, AMT section 115 JC. Now, here we apply AMT only if 2 conditions are fulfilled. Condition number 1, my assessee should be an eligible assessee. Now, who is an eligible assessee? Either this assessee should be an individual or HUF or AOP or BOI or AJP, or this assessee should be a firm or LLP. But this assessee should not be a company. If individual HUF, AOP, BOI or AJP, then the adjusted total income number should be more than 20 lakhs. If firm LLP, I will not bother about adjusted total income. Now, what is this adjusted total income? This is nothing but your total income, add back chapter 6A part C deductions, add back section 10AA tax holiday, add back section 35 AD deduction, but on those 35 AD assets, you can claim depreciation. This is going to be your adjusted total income. Okay, so first condition, assessee should be an eligible assessee. That is, if individual HUF, AOP, BOI, AJP, then adjusted total income should be more than 20 lakhs. If assessee is any other assessee, for like firm or LLP, I'm not considering company, because for company, we have something called as minimum alternate tax, which is not a part of our intermediate syllabus. So if firm or LLP, I don't bother about the adjusted total income. If individual HUF, AOP, BOI, AJP, then I will look at the adjusted total income should be more than rupees 20 lakhs. All right, now listen to me. The second condition of my assessee is that either he should be having chapter 6A part C, or he should be having 10AA, or he should be having 35 AD. Any one out of these 3 deductions he should be having. At least one of them he should be enjoying. All right. Now, when I say chapter 6A part C, what are the chapter 6A part C deductions in your syllabus? In your intermediate syllabus, you learn about 3 chapter 6A part C deductions. One is section 80 JJA, the other is section 80 QQB, and the last is 80 RRB. So these are the 3 chapter 6A part C deductions in your syllabus. So your first condition is that assessee should be an eligible assessee. Second condition is that either he should be having chapter 6A part C or 10AA or 3580 deduction. Chapter 6A part C indicates either he should be having 80 JJA or 80 QQB or 80 RRB. All right, guys. So this was our basic discussion on AMT. Now listen, if both these conditions are fulfilled, you will calculate AMT at what rate? You will calculate AMT at the rate of 18.5%. All right. Now, you will see what's a normal income tax. You will compare the normal income tax with the AMT. Now, two things are possible. Either the normal income tax may be more than AMT, or normal income tax may be less than AMT. Which of the two numbers will you pay? You will pay whichever is higher. So if normal income tax is higher, you will pay the normal income tax number. If AMT is higher, you will pay the AMT number. But in case you are paying the AMT number, that is, AMT is more than normal income tax, so you are paying the AMT number. In that case, you will have AMT credit. And how much will this AMT credit be? It will be nothing but the difference. It will be nothing but the difference between AMT minus normal income tax. This difference will become AMT credit. This AMT credit you can carry forward for 15 years. In any of these 15 years, if normal income tax is higher, in that year you can adjust this AMT credit against normal income tax. So I'll give you an example. Let us say in year 1, my AMT was 100 rupees and my normal income tax is 60 rupees. So which of the two will you ask me to pay? You will ask me to pay AMT. If AMT is higher, then in that case you will have AMT credit, guys. If I just told you, right, if AMT is higher, you will have AMT credit. How much AMT credit you will have? The difference. What's the difference? 40. And this will have life of how many years? This will have life of 15 years. This 40 is relating to year 1. Okay. Now let us say in year 2, my AMT number is 90 rupees and my normal income tax number is 85 rupees. Now which of the two will you pay? You will pay AMT 90 rupees, you will pay. But in that case, again, you will have AMT credit. You already have AMT credit of 40 belonging to year 1. Now you will have how much more AMT credit? You are paying AMT. So the difference of 15 rupees belonging to year 2, this will also become your, no, not 15, 5. This 5 will become your AMT credit. Okay, now let us say in year 3, your AMT was 75 rupees and your normal income tax is 110 rupees. Now, which of the two will you pay? You will pay whichever is higher, 110. Now, 110 is normal income tax. So, you will enjoy the AMT credit. Whenever you pay normal income tax, from this normal income tax, you can adjust AMT credit. How much AMT credit you have? 45 AMT credit you have. Can you adjust full 45? No. How much you can adjust? How much difference do you have here? 35 difference, you can adjust 5 credit, and how much tax will you actually pay to the government? You pay only 7. So if you look at AMT now, you have 40 rupees belonging to year 1. Out that 40 rupees have utilized 35. So how much are you left with belonging to year 1? Belonging to year 1, you're left with only balance 5. And for year 2, you are still having the whole 5. Year 3, AMT is 75. Normal income tax is 110. I will pay whichever is higher. Clearly, which is higher? Normal income tax is higher. So I will pay the normal income tax of 110. Okay, but when normal income tax is higher, I can enjoy the AMT credit. I can enjoy the AMT credit. AMT credit I'm having. But how much I can adjust? Only up to the difference I can adjust. It is only 35 I can adjust. So out of 45, I will enjoy 35. 5 is left and this 5 as it is. Tell me AMT crystal clear. Yes, can I start with the question now? Everybody who is still here, are we all thorough with AMT? Yes, my assessee should first of all be an eligible assessee, guys, and then he must also be enjoying either Chapter 6A Part C or 10AA or 35 AD. Keeping all this in our mind, now let us look at the fourth question. Look at what it says. Mr. Xavier, an Indian resident individual, set up a unit in special economic zone in the financial year 15-16 for production of mobile phones. The unit fulfills all the conditions of Section 10AA of the Income Tax 1961. So first of all, my SSE has section 10AA benefit, even 10AA revised through this one question. These 4 questions are such good questions, guys. So many adjustments will get revised for you through all these 4 questions. So through this question, section 10AA, we will see the unit was set up in 1516. And the question themselves is saying all the conditions of 10AA is fulfilled. Good thing, we don't have to check. Then they are saying during 1819, he also set up a warehousing facility for storage of agricultural produce. So which means which section do we have to apply? 35 AD. So we have 10AA, we have 35 AD. Then capex in respect of warehouse is 93 lakhs, including cost of land 13 lakhs. So how much capex, how much deduction will you get? You will get only 80 lakhs. Under 35 AD, what are the numbers that you don't get deduction under 35 AD? Land, then goodwill, and number 3, financial instruments. See, other tangibles get only goodwill, land, and financial instruments. So here the capex is 93 lakhs, but I will ignore the land of 13 lakhs. I'll take only the balance 3 lakhs. Warehouse was operational from 1st April 19. Expenditure of 63 lakhs was capitalized in the books on that date. All right, here there is a mistype. This should be 93 lakhs. 93 lakhs was capitalized in the books on that date. Then, further details relevant for 1920 are as follows. Profit from operation of warehousing facility before deduction under 35 AD is 1 crore lakhs. SEZ net profit is 50 lakhs. Export sales of SEZ unit is 9 lakhs. Domestic sales of SEZ unit is 60 lakhs. Compute income tax, including AMT, payable by Xavier, assessment year 2021. So the previous year in the question is 1920. The assessment year in the question is 2021. They are asking us to calculate the income tax, also considering AMT. Okay, first of all, let us do our normal, usual calculations, guys. Normal calculations without considering AMT. Let us calculate first. All right, now listen. What is the total income of my asset? I guess there was a disruption, but I hope we've reconnected. Yes, guys. Please confirm I'm back. I'm recording doesn't get affected. There's terrible internet problems. Or okay, listen. So question number 4, let me discuss again. So I was telling you we're going to be calculating only using the normal method first. So we're going to calculate the total income of my assessee. He has 2 businesses. Number 1, he has warehouse business, and number 2, he has the SEZ business. So when I talk about the warehousing business of this assessee, his income from the warehousing business is 1 crore 10 lakhs. All right. From this, I will give him the 35 AD deduction. Stuck again. Guys, is it still stuck? Oh God, what's happening today? Please tell me, am I audible? I've changed the network now. I've switched to Wi-Fi. Yes, is it better? Thank you. Listen, so I was discussing with you about question number 4. Normal income tax is what we are calculating, ignoring AMT for a while. My assessee has totally 2 businesses. Number 1, my assessee has a warehousing business, and number 2, my assessee has the SEZ business. Okay, so I'm considering the warehouse business first. From warehouse business, he has earned 110 lakhs, and against the warehouse business, I will take 35 AD deduction, right? 35 AD, how much I will consider? I've already discussed this with you. I'll consider only 80 lakhs. All right. So my current year is 1920, previous year 1920, 1920, 80 lakhs they have capitalized. So I'll consider only 80 lakhs. I will not consider land. So so what is going to be my taxable income from the warehouse? The balance 30 lakhs will become my taxable income from the warehouse. Then after that, I'm talking about the SEZ unit now. SEZ unit, how much net profit has my assessee made from the SEZ unit? 50 lakhs. But from this 50 lakhs, I will get section 10 AA deduction. Yes. Now 10 AA, you know that for the first 5 years, how much deduction do you get? For the first 5 years, 100% of the net profit from exports. Next 5 years, 50%. And the third set of 5 years, 50% or whatever amount you have transferred to SEZ reinvestment reserve, whichever is lesser. All right. Now talking about this question, which year are we in right now? The question says that we started the business in 1516. Okay. And we are doing the calculation for 1920. So tell me, which year are we in right now? We are in the 5th year. Why 5th year? Because even the year in which you commence business, even in that year, you will take 10 AA. So 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, we are in the 5th year. So in the 5th year, how much deduction will you get? Full 100%. So what is my net profit from export turnover? See, this 50 lakh profit which I have made, this 50 lakhs is from export and domestic sales. So total 150 lakhs. Out of 150 lakhs turnover, I made profit of 50 lakhs. But what is my export turnover? 90 lakhs. From this 90 lakhs, how much profit did I make? So 90 lakhs into 50 lakhs by 150 lakhs. In other words, net profit of the SEZ unit into export turnover divided by total turnover. That's a formula we use, guys. Net profit of the SEZ unit into export turnover divided by total turnover. This is going to give me the 10 AA deduction. I will take 100% deduction. Why 100% deduction? Because this is the 5th year. How is this the 5th year? Even the year in which I commence manufacturing, even in this year, I will take deduction. So 15-16 will be my first year. 19-20 will become my 5th year. Even in 15-16, I will take deduction. So 19-20 will become the 5th year. I will get 100% deduction. How much is this? 90 lakhs into 50 by 150, this is going to be 30 lakhs. So 30 lakhs is my 10 AA deduction. So from SEZ unit, my profit is going to be 20 lakhs. Is this clear, first of all? So what is the total income of my assessee? Total income of my assessee is going to be 50 lakhs. So net profit of 50 lakhs is what I am getting out of 150 lakhs of turnover. So how much profit am I getting just from the export turnover alone? Cross multiplication I did and I got the number. So my assessee's total income is 50 lakhs. On this 50 lakhs, guys, if I consider normal taxation, if I consider normal usual taxation, what will be the tax liability of my assessee? How much tax will we ask my assessee to pay? Assessee is an individual, not a senior citizen and all. So we'll ask our assessee to pay up to 10 lakh. You anyways have to pay 1,12,500 plus above 10 lakh, whatever income you have, I'll ask the assessee to pay 30%. So 30% of the income in excess of 10 lakhs. So how much is that going to be? Do you get this number? 13,12,500. And no rebate because income is more than 5 lakh. No surcharge because income is not more than 50 lakh. It's exactly 50 lakh. Exactly 50 lakh. No surcharge. Surcharge only if it is more than 50 lakhs. So straight away we will add cess at 4%. So after adding cess, it's going to be 13,65,000. So this much tax you have to pay if you choose normal tax. Now I'll consider AMT. Okay, so for AMT, first of all, I have to check whether my two conditions are fulfilled. What is my first condition? My assessee should be an eligible assessee. If my assessee happens to be an individual HUF, AOP, BOY, AJP, assessee's adjusted total income should be more than 20 lakhs. So we need to calculate the adjusted total income of the assessee. And what is adjusted total income of the assessee? Total income, add back chapter 6A part C, add back section 10AA, add back section 35 AD, but on the 35 AD asset you can subtract depreciation. So what's the total income of my assessee? 50 lakhs. Do I have any chapter 6A part C? Do I have 80 JJA, 80 QQB, 80 RRB? No. Do I have 10 AA? Yes. 10 AA I had enjoyed 30 lakhs. So I'll add back 30 lakhs and then I'll add back 35 AD of 80 lakhs. But on this 35 AD asset, I will claim depreciation. What is this 80 lakhs? This 80 lakhs is nothing but construction of warehouse building. Building, what's the depreciation rate? Building depreciation rate 10%. So on this asset, I'll claim depreciation. So how much will this be now? This is going to be 1 crore 52 lakhs. So this is my adjusted total income, which is more than 20 lakhs, guys. So is my assessee an eligible assessee? Yes, he is an individual and adjusted total income is more than 20 lakhs. So he is an eligible assessee. And condition 2 is also fulfilled. He doesn't have chapter 6A part C, but he does have 10 AA, he does have 35 AD. So both conditions are fulfilled, which means AMT is applicable. And what will AMT be? 18.5%. 18.5% of what? 18.5% of the adjusted total income. So 152 lakhs into 18.5%, that's going to be 28 lakh 12,000. Now here we will have surcharge, guys. Why will we have surcharge? Because income is more than 50 lakhs. So more than 50 lakhs, we will have surcharge. 1 crore 52 lakhs. How much surcharge will you have? More than 50 lakh up to 1 crore, 10%. Right, more than 1 crore up to 2 crores, 15%. So we'll have 15% surcharge. Income is more than 1 crore up to 2 crore. So you'll have surcharge at the rate of 15%. 15% of what? Surcharge is always percentage of tax. So 28 lakh 12,000 into 15%, 4 lakh 21,800. We will not have any marginal relief because the number is far away from 1 crore. So you will straight away add cess at 4%. After adding cess, what's your total tax now? It's going to be 33,63,152, which you will round off to 33,63,150. So if I follow AMT, I have to pay 33,63,150. Without AMT, 13,65,000. Which of the two are we supposed to pay? We pay whichever is higher, right? AMT or normal income tax, whichever is higher we have to pay, that is we will have to pay AMT. But don't worry, assessee, we will give you AMT credit. How much AMT credit we will give you? the difference between these two numbers. So what is the difference between these two numbers? The difference between AMT and normal income tax. The difference is 19,98,150. This much AMT credit we will give you. This AMT credit will have a life of 15 years. In these 15 years, whichever year your normal income tax is higher, that year you can claim this AMT credit. All right, so this was our entire discussion regarding section 115 BAC in the previous question and AMT section 115 JC over here. What did we do here, guys? We first calculated on the basis of normal calculations. For warehouse, I gave 35 AD deduction. For SEZ unit, I gave 10 AA deduction. 10 AA deduction, how do you calculate the deduction? Net profit into export turnover divided by total turnover. First, because this is first 5 years, I'm giving 100% deduction. So my net profit of 50 lakhs, export turnover is, my net profit is how much? Net profit here is 50 lakhs. Net profit is 50 lakhs. 50 lakhs into my export turnover of 90 lakhs. Total turnover is 150 lakhs. In other words, my formula is net profit into export turnover divided by total turnover into 100%. Why 100%? Because first 5 years. So my net profit is 50 lakhs into export turnover is 90 lakhs divided by total turnover is 150 lakhs into 100%. So this is going to be 30 lakhs. This is going to be my 10 AA deduction. So so 50 lakhs was my total income. On this 50 lakh, I calculated normal tax liability. All right. And then after that, we considered AMT. In AMT calculation, what did we do? AMT calculation, we first saw our assessee is an eligible assessee. How come assessee is eligible assessee? Because he's an individual and his total income, add back chapter 6A part C, add back 10 AA, add back 35 AD, subtract depreciation on 35 AD asset is more than 20 lakhs. So therefore, assessee is an eligible assessee. Eligible assessee, and he has one of these three deductions. Both the conditions are fulfilled. So therefore, AMT is applicable. AMT will be 18.5% of adjusted total income. We had to consider surcharge also because here our income is more than 50 lakhs. Haripriya is talking about expense 93 lakhs. That expense is relating to warehouse. So therefore, we have considered this under 35 AD. 35 AD 93 lakhs, but I will not consider the land of 13 lakhs. I'll consider only the balance 80 lakhs. All right, guys. So with this, I think we come to an end to our fourth question. So with this, we'll also close the session here. I think we've done a very good revision. Several adjustments got revised through the across. I think the last, what's the time? Oh, it's already 10:15. I've kept you for too long. So I think across the last 3 hours, we have run through several adjustments. All right, especially 115 BAC and AMT. These two I for sure wanted to discuss with you all. All right, so with this, I think we are done with this question. We'll close over here. All right, in case you still have any doubts, you can always WhatsApp and you can get them clarified. All right, I hope this session benefited you all, guys. I hope at least some clarity you all got. I'm very sure you all must have found for sure 2 to 3 adjustments newly you must have seen over here for the very first time. All right, so let's hope one of these questions copy paste come into our examination. All right, that will be total magic. All right, so thank you guys. Bye-bye. Good night.
Good evening, everyone. On behalf of entire team of CASA, I would like to extend my heartfelt gratitude to our today's faculty, CA Anushree ma'am, for provided us with an amazing session today on the topic totaling of computation. Thank you, ma'am, for your session. And also, thank you each and everyone for you to attending this session and making this revision series a successful program. Thank you all.
Thank you, guys.